Thank you, everyone. I welcome all the participants in the today's seminar, Code of the Ethics, and I also welcome our learned speaker, Chandrashekhar Vaze sir, and also recognize the presence of Daya Sankarji Agarwal, Chartered Accountant, President, Direct Professional Association, and Nilima Didi, today's session chairman. Now I hand over the proceeding towards the Daya Sankarji to address the keynote. Over to you, sir.
Thank you, Mandro. Good afternoon, everyone. Today's session on Code of Ethics reminds me of the time when I first studied about it as a part of our curriculum in CA final. First and second schedule, professional misconduct, and all these stuffs. Right. The code has constantly been updated from time to time since it was first introduced in 1963, and the latest one was made applicable from 1st of July 2020. Friends, to deliberate on the topic, today we have with us a renowned authority on the subject, Chandrashekhar Vaze, and I am sure we are going to have a great learning session. I must say, ICI has done the right thing by making it a mandatory requirement to attend such session. It help us to revisit certain things which we might have forgotten. With this, I thank you. Over to Mandra.
Thank you, Via. Now, today we have a session chairman, Nilima ji. Now I request Nilima ji to speak some words on the topic, video subject. Over to you, Madam Didi.
Good afternoon, everyone. I would just say that we are really fortunate to have Shri Vaje with us, who is really a veteran speaker on this Code of Ethics. And it is a privilege that he is speaking on this new Code of Ethics. I don't think anything is required from me when he's a speaker, but since I've been requested, a very, very small brief on this topic. The new Code of Ethics has come with certain amendments, and it has come into effect from the 1st of October 2022. And the earlier amendments, which were topics which were relating to nuclear, the fee structure, the taxation services to audit clients, these had not been taken up earlier, or they had been deferred. And from 1st of October, these have also come into effect in the Code of Conduct. And this Code of Conduct is given in 3 volumes. The first volume contains that it says that it is applicable to all the practicing accountants, whether they are into service or whether they are into practice. The ethics which are applicable to each person being in service or in practice, and the international independent standards. So this is there in the first volume. The volume 2 is giving chapters on the accounting and auditing standards, the CA Act of 1949, the council guidelines for advertisements, the self-regulatory measures which have been recommended by the council. And the third volume is giving, it has 2 schedules, and it gives case laws reference on the professional misconduct. So this is a very small brief. I don't think anybody wants to hear you. We have a wonderful speaker in Mr. Vaje. So over to you.
Thank you, Didi. Now, as we all know Vaje sir, he do not do any introduction, but as a matter of custom, I have to read his profile, sir. Chandrashekhar Vaze sir, BCom, FCA, ACS, LLB. Practicing as a chartered accountant since 1980 for more than 40 years, 4 decades. Active participation in the work of many professional bodies of CAs, delivered lectures and written articles on taxation, banking, and allied subjects, also on Code of Ethics of CAs. Delivered lectures and written articles on Valmiki Ramayana, Mahabharata, Bhagavad Gita, and many other social subjects. Anchored musical and other cultural programs. Actively connected with arts and literature, directed play in Sanskrit language, and also worked for promotion of Sanskrit language. President of Maharashtra Seva Sangh Mulund, 84 years old, reputed organization. President of Sanskrit Bharat Konkan region, director, ex-chairman of Jan Kalyan Sahakari Bank Limited, held many responsible positions in many organizations. Recipient of Yoga Mitra Award from Yoga Vidya Mandir, Niketan, Vashi, Navi Mumbai. recipient of Best Social Worker Award from Senior Citizen Association, Mulund, recipient of Jal Jasprit Award from Best Teacher in Basic area. Thank you, sir. Now I request Shyam to offer a digital cloud video to other learner speaker. Shyam,
Sir, most welcome to DTPA.
sir, please accept as a token of
Thank you.
respect for DTP study circles.
Thank you very much for this floral welcome.
Now over to you, sir.
Yes, I'll first set the PPT and then I'll start.
Yes, sir.
Well, yeah.
Shyam PPT, sir.
Sir is sharing.
Yeah.
Yeah, it's visible.
Yes, sir,
Yes,
it is
sir.
visible.
Yes, yes. Yeah. Well, namaskar and good afternoon to each one of you. It's my pleasure to be with the Northeast Kolkata people, although when we were chatting before the session started, I was informed that from Pan India, the members have joined. So my good wishes and my greetings to all of you. Mr. Mahendra Agarwal, Mr. Shyam Agarwal, Mr. Dayashankar Agarwal, apparently all Agarwals in that the hem of affairs, and also respected chairperson of this session, Nilima ji, and ladies and gentlemen. Code of ethics, I am fully aware that people treat it as a burden on their head, therefore no one is really keen to listen to this subject. But fortunately or unfortunately, Institute has thrust that subject on us on various branches and study circles. But now the awareness is increasing. That also I must admit that it's not just because it is mandatory, not because it is compulsorily you have to fill in 2 hours, but now people are taking really some interest in this because its gravity is being felt greater and greater. And therefore now the audience has become more positive. Earlier, when they used to learn about this topic, they used to shy away from all seminars. And then the attendance, physical attendance used to be very discouraging or perhaps very disappointing. But now the things are changing because the times are changing. Earlier, when the seriousness was not felt that much, but now people are becoming more serious because more and more complaints under the disciplinary mechanism are coming to the institute. And therefore, the awareness of this is being felt at much more degree because earlier we were little unconcerned. So friends, at the outset, let me mention to you that I will not be giving any theoretical sermon or pravachan on this subject. Theoretical part, many of you may be aware also. But what I will be doing is sharing my experience of more than 300 disciplinary cases which I have handled so far. And I will try to make this presentation as interesting and as lively as possible. So I assure you that it will be a lively session and there's a good scope for large value addition to all of you. So please listen to it carefully because any time, from any direction, any attack of disciplinary case can come on us. That is why our motto, which was recommended by Maharshi Aurobindo in the year 1949 and which is adopted from Kathopanishad, is Ya Esha Supteshu Jagarti. He who is awake when the world around is asleep. And chartered accountant is there compared with the ultimate truth, that is Brahman, Atman. And therefore, there is nothing higher than this, because truth, they say, is the ultimate thing in the world, Satyam. And we are concerned as a professional also very much with the truth because our report is also true and fair. So we are supposed to report as a true and fair view of the financial position. And that is why this Ya Eshu Supteshu Jagarti. There is a constant need for awakening. Jagarti means awakening. So that awakening has to be there. We cannot afford to be now in the sleep, because now people are taking advantage of many of our qualities, our submissiveness, our mildness, and people are taking us for granted. So as far as introduction to the topic is concerned, I must mention to you that, as you know, ethics is a set of moral values that everybody knows. Code of ethics actually is not only a philosophical or a theoretical subject, but it is now very much practical. Those practical cases which I will be dealing with you, that will make it very clear that it can come to us any day or any moment. And then what is important in ethics is eternal vigilance, akhanda savadhanata. Eternal vigilance is the cost of independence. Madam Nilimaji mentioned about independence, independence standards. How can we protect our independence? Our jawans, our soldiers are constantly awake and they are fighting against the enemies to protect our independence. So that is why we can have a peaceful life. Similarly, if our profession's independence is to be preserved and protected, we need to be eternally vigilant. And when I say we, it means we individually as well as collectively. If we are collectively vigilant and collectively very much awakened about our rights, our duties, then nobody dare touch us, nobody dare have any attacking mood against us. And therefore, all of us in a united manner should become vigilant, should become more and more diligent. And in the field of ethics, there is another interesting sentence that in the ethics, you are either ethical or unethical. There is no in-between stage. So you cannot say by and large I am ethical. By and large I am ethical means, and at times I compromise on ethics. So you have to be absolutely ethical. But then, friends, no one in the world has become flawlessly ethical. In our Puranas, there are three nitis. Three nitis, one is Shukra niti, one was Vidura niti in Mahabharata, and the third one was Chanakya niti. And Vidura niti, Vidura says to Dhritarashtra that so far in the world, there was only one person who has never compromised on ethics. And that was Shukracharya, who was the guru of the or mentor of the demons. Rakshasa ka guru tha Rakshason ka. He is the person known as never to have violated ethics. So ethics is not the monopoly of only chartered accountants or only good people. Even underworld people also have their ethics. हम फिल्म में we listen to the dialogue कि हमारे भी उसूल होते हैं. So that usul is ethics, because every profession, every vocation has its ethics. Now, we loosely call it as code of conduct. I must clarify that, because normally in all other professions and in the government circle, there is what is called as code of conduct. But in the year 2000, our institute very consciously changed the name nomenclature from code of conduct to code of ethics. Why? What is the logic? Conduct is a generic term. Conduct will be good or bad. But ethics necessarily denotes something positive. There is no such thing as good ethics and bad ethics. There are either ethics or there is absence of ethics. And therefore, it's a conscious decision that now we no longer call it as code of conduct, but it is code of ethics. Very few people are actually aware of this nicety. So friends, with this, we go to the, because as I mentioned to you, I'll be more telling you the real life stories. Stories in the sense, those are not imaginary stories, but those are the cases which I have myself handled and a few high court decisions. Because in our ancient culture, through the stories, if we tell, like Hitopadesh is there, Panchatantra is there, through the stories, the topic or the principles become more clear. So the first and foremost message that I would give you is that in our profession, never do anything in good faith. If you do anything in good faith, just relying on others, don't trust anyone. Don't trust your staff, don't trust your article, don't trust your partner, your client, the regulator, nobody, no brother, sister, parent, no one. So when it comes to signing as a chartered accountant, you should trust no one, not even your spouse. And I'll give you a very interesting story. The first one with which I always start my presentation. Husband and wife both were chartered accountants. Both were practicing as proprietors. They were not a partnership firm. And wife did the audit of a cooperative society for 3 years. Thereafter, the husband did the audit. And in subsequent years, there was a divorce petition between the two. And the wife filed a complaint that the husband took the audit without communicating with the previous auditor, that is to herself. So to that extent, the things have gone, and that means no relations are permanent now. All relations are, especially the commercial relations, the business relations, financial relations, are bound to result in some dispute or the other, some friction or the other, some conflict or the other. But now it has come even to personal relations. There are complaints filed by spouses, there are complaints filed by brothers, sisters, partners, even parents, or even the sons. So there is not a single exception to this rule. Anyone can take an undue advantage of this disciplinary mechanism. Question many chartered accountants put, and they say, why this burden only on us? Doctors, lawyers, they don't have any ethics. They behave like accountants. The reason, friends, is that basically the foundation of our profession is our credibility, our trustworthiness. Our financial decisions are taken on the basis of our signatures. In other professions, only some individuals are affected. But when it comes to finance, our signature commands such a value that it may destroy the total financial structure or financial life of a country or of a society. If there are financial frauds, if there are financial, you can say, scams, then it affects the life of everybody in the society. If a doctor commits a mistake, probably 1 or 2 patients will die. If a lawyer commits a mistake, his client will suffer. But if we commit a mistake, and this is very important point, friends, that on the basis of many people invest and put their finances, perhaps based on our certificate, our signature. And therefore, the value of our signature is very high, and we should recognize that. Therefore, we can't afford to be the followers of others. Remember, this is very important, that we can't afford to be followers. We have to be leaders. We are most intellectual people in the country. Our exam is one of the most difficult exams, and we have passed that by slogging round the clock. And then you cannot afford to lose that degree so cheaply. Therefore, what is most important is you establish your reputation, you restore the value of our signature. Only that is why this code of ethics, the burden is felt more on us. And then when people say that let the other people behave properly, then only I will improve my conduct, which is wrong, because this question was put to Swami Vivekananda, and he said, this is like saying that you are standing on one bank of the river and you say that I will cross the river when the entire water flows away. So you have to make a beginning. Now New Year is coming, and I think we should make a pledge. We should take a pledge that we will behave more and more ethically. Only then the reputation of our profession will be intact. In fact, the society's expectations, we must be aware that society expects that our code of ethics should be enforced very strictly. Society complains that our institute is very slow in processing or in disposing of the complaints. The society expects that the wrongdoer should be punished very severely, but they complain that our punishments are very mild, and therefore their intention is that it should be enforced very strictly. What are the sources of code of ethics? Before that, let me also mention that there is one more case I will tell. There was a chartered accountant who was sitting in his office, and let me also make it clear that my PPT, although the theoretical points are mentioned there, the cases which I am telling, the stories which I am telling are not necessarily reflected in my PPT. So therefore, you will not find what I am talking in my PPT, although the principles will always be there. So that chartered accountant was handling the tax audit of a proprietary concern. Once that proprietor's married daughter comes to his office and she says that she wants him to attest the income tax returns of her husband and of her mother-in-law. So the normal question he asked as to why it is required, and she's told that it is required for some visa purpose or some bank loan purpose, the normal reasons. Now, this chartered accountant had not filed the returns of her husband and mother-in-law. So what he did, she had brought the hard copies. So he verified on his computer about the veracity of the returns of the statements, and he found that they are quite all right. And therefore, he attested them in a manner which is now recently, as per the guideline of the institute, there is a manner prescribed as to how you should attest it. You cannot attest it just by saying as true copy and your signature and seal, because that will be taken rather in an incorrect manner by the people or by the reader, that you are certifying the income of that person. Remember that we have no authority to certify the income of any person. We have to merely say that we have to give a disclaimer, and we have to merely say that this is the income as reflected in the income tax return which is submitted to the income tax authorities. So what kind of remark we should write is given in the institute's guideline. We should study all the institute's pronouncements, guidelines, notifications carefully, because a contravention of these guidelines is also an act of misconduct. So friends, so many guidelines are coming. In one of these guidelines says how you certify, how you attest such income tax statements. Accordingly, he did. But then unfortunately, he received a complaint from that lady's husband saying as to how without his written authority, the chartered accountant parted with the attested copies of the ITR to his wife. Now, what was the reason behind it? The wife had filed a case in the court of law for domestic violence against the husband. And therefore, she actually wanted it for her court proceedings. So again, I am repeating the principle that no relations are permanent now. We are in Kali Yuga. So no relations are permanent, and therefore you have to be constantly awake. As far as signing is concerned, so the most important concept in our audit profession is professional skepticism. In the course of my stories, I will deal with all these important concepts. So firstly, never do anything in good faith. As a corollary to that is the professional skepticism. Now, professional skepticism does not mean that you should suspect everything, but it only means that you trust but verify. You trust, you don't proceed with distrust. Remember that we are not fraud detectors. We are not forensic auditors. We are not investigators. Unfortunately, the line between the error and the misconduct is becoming more and more thinner. Unfortunately, the errors are being treated. Although there is a decision of Kolkata High Court only that every error is not a misconduct. Even a blunder is not a misconduct. Even a negligence is not a misconduct. But gross negligence is a misconduct. And what is gross negligence? The court said that gross negligence means there should be an element of dishonesty or ill motive. But if you argue this point before the disciplinary committee rightly retorts or rather retaliates, or rather it responds this way. They say that this means that if you have a good friend who is a very honest, he doesn't do any hanky-panky, but he doesn't understand much about the account. So he just prepares some balance sheet and presents it before you and requests you to sign. Now you, as a matter of courtesy, as out of your love and affection about your cousin or your friend or whosoever he is, you put your signature. Now, while signing, you don't intend to deceive anyone. While signing, you are not dishonest or you don't have any ill motive. But friends, we don't realize that this act of signing itself is a dishonesty. Why? Because we have signed it without verification. Any signature of a chartered accountant, it is presumed that he has signed after verifying. This is the great principle that you should always, and that is why your signature commands value. People take it that you have verified and signed. You cannot say that, no, he was my friend, that is why I signed just like that. That is a misconduct. In fact, one of the items of misconduct is that any signature or certification without verification is a misconduct. So it is in a way dishonesty. You don't have ill motive, I understand, I appreciate, but this is simply dishonesty because you are giving an impression to the reader that you have verified it. So please, these concepts be kept in mind very, very firmly so that any person who requests you out of good faith or out of courtesy, you should be politely able to say no to him, unless you verify. So verify is that is why the third party evidence is also important. Not that you distrust that person, but simultaneously when he says that my bank balance is this much, then it is necessary for you to verify really as per the bank statement whether that balance is there. That is third party evidence. Now, if you do something in good faith, and that was the Satyam case, one of the parts was in the Satyam case was this, that there was a huge deposit of thousands of crores of rupees, and they had certified it, whereas in reality that deposit never existed. Now, when it was argued that a corporation which is such a reputed international corporation having won the Golden Peacock Award for the governance, good governance, then should we not trust that when they are showing us the fixed deposit receipt, they are showing us the amount in the balance sheet, should we not trust them? The response of the finance minister to that was, if a fixed deposit of 10,000 crore rupees, if the word cannot rely on the signature of the chartered accountant or the auditor about the existence of the deposit, then why is audit required at all? He said, then any professional, any Tom, Dick and Harry can certify if it is to be done in good faith. So audit means that there has to be a professional skepticism. So you trust, but you verify. You cannot go blindly on good faith. So this is the message, that now everywhere professional skepticism means that you should trust but verify. Now, what are the sources of code of ethics? It is not that the code of ethics has fallen from the heaven when our institute was formed. Particularly, ethical principles were there in our country for more than thousands of years. Ever since the human civilization started, there are ethics. So in our ancient scriptures, there are messages which mentors used to give to their pupils after they completed their education in the ashrama. And what were the three messages? Firstly, Satyam Vada. Satyam Vada means speak. And we are very much concerned with the truth. We have to certify something as true and fair. So Satyam Vada, Dharmam Chara. Dharmam is duty. Dharmam is not religion in the sense that we understand. Dharmam does not mean that the procedure of worshipping the god or puja part, that is not dharma. Dharma is duty, so discharge or perform your duty religiously. That is dharmam chara. And the last one is swadhyayat ma pramadaha. That means never commit any default in your continuous study, and that is nothing but our CPE. So our CPE was contemplated thousands of years ago in our country, that even in those days, there was constant upgradation of knowledge, and the sages used to advise their students that you keep on updating your knowledge. Because once you go complete 12 years in the ashrama, then you may not have that opportunity to come again to the ashrama. But then you have to constantly study and keep yourself updated. Therefore, all these three are very much relevant in the modern times. It's not that ancient scriptures, that means it has no value today. It has all the more value this time because CP is now recognized as a concept in all the professions. Continuing professional education. And therefore, friends, these are the sources of ethics, code of ethics. But what is the present image today of the profession? That we are too accommodative. We are not able to say no to anyone. Whatever the client says, we are simply trying to follow it. In fact, sometimes we are risking our own certificate, we are risking our own career, sometimes we are risking our own life also perhaps. But we are afraid that the client will go away if we don't help him. And that constant fear makes us compromise on many things. we overlook many things because we are too accommodative. That means we feel that we cannot afford to lose this client. At the same time, it is a fact that client does not give you that much of respect at all. He takes you for granted. Client says that किसी सीए को पकड़ के ये सब कर डालो. That means it is a humiliating treatment to us. Now I will share with you a very, very disturbing and alarming fact that in a very reputed organization, there was a checklist of all documents which are required for whatever their license or that's visa or whatever they were issuing. And there it read, avoid bringing chartered accountant certificates as the same are often found unreliable. Now, this is typically the parents' wealth statement that we certify when the students are going abroad for education. Now, we are aware always that this house has been brought on paper, how these assets have been brought on paper, that we are aware, but still we certify it, and as a reward for that, we get this kind of a certificate that avoid bringing CS certificate as the same are often found unreliable. Now, our Bombay Chartered Accountants Society made a representation and this line was deleted. But can you erase that line or that thought from the minds of those people? Therefore, this is how the society perceives a chartered accountancy profession. Credibility and respectability, that is why is diminishing. Friends, when I say the respect diminishing, I was told as a in the dowry market also now the value is reducing. So, chartered accountants are the people who manage everything. They manage everything. Whatever thing jo nahi ho raha hai, wo bhi if you give it to the chartered accountant, he will manage. And unfortunately, chartered accountants manage even their CPE hours. Now, I am aware that although there is a good number of enrollment, but whenever I go in the month of December, I am fully aware that it may not be for me or it may not be for the topic, but it is only for the completion of the CPE. That is why we are managing everything. And therefore, in that process, we are compromising on so many good principles, and that is why our respectability is diminishing. Now, I will share with you with another interesting case. Remember that these are not imaginary stories. These are the actual cases which were handled by me. Now, friends, there was a firm which was a very reputed firm, more than 80 years old now. By this time, it is more than 85-year-old perhaps. But that time it was 75-year-old firm when I handled it. And all systems were in place. There was a private limited company whose audit this firm was handling for last 25 years. And that company had only two shareholders. Both were directors, both were brothers of each other. Elder brother held 60% shares and the younger held 40%. Elder was the chairman, of course. Now, once when the deadline was approaching for filing the income tax return, the younger brother approaches the chartered accountant's office and he says, as usual, you just take the hard copy. Now the balance sheet audit has been done, financial statement. So you put your signature. I will go to obtain the signature of my elder brother because he is busy just now. I will obtain his signature and will submit the return. So in good faith, the chartered accountant put his signature as auditor, gave the copies to him, 25-year-old relationship. And what the scheming mind of that younger brother was that obviously he had some friction with his elder brother also. As I told you, that whenever there are commercial relationships, after a certain number of years, frictions are bound to arise. This is our common. In fact, 90% or 95% of the cases of disciplinary are filed because of some dispute among some other persons. And since chartered accountants are a very soft target, it's a very vulnerable position. Therefore, they always file complaint against chartered accountant with an expectation that he will, once you harass a chartered accountant, he will exert some pressure on the other party. This is the normal logic or normal thinking about, or rather normal motivation of the people who file complaints, because their dispute is not against the chartered accountant or with the chartered accountant. Their dispute is against somebody. But our target chartered accountants is very soft. Therefore, they file complaints. Now, this particular person who obtained the signature of his brother, but he never put his own signature, and he submitted the return. And then he made him a complaint on 2 counts. What were the 2 counts? They are all eye-opening, friends. They are eye-openers. They are actually the eye-openers and nightmarish also. Because if you are doing anything in good faith, and that is the theme which I have been, right from the beginning, I have been telling, don't do anything in good faith. So what he did was, first ground of complaint was that under the Companies Act, the financial statements are required to be signed by 2 directors, private limited company, and then the auditor has to sign. Whereas in this case, only one auditor had signed, one director had signed, and therefore it was a violation of the Companies Act, and therefore the chartered accountant has committed a misconduct. Now, at this juncture, let me clarify another misconception among the minds of many chartered accountants. When I am talking this, actually, I have before my eyes the audience which belongs to an average level of practice or chartered account of this thing, not very high-fi firms, or they are not with auditors of the listed companies, many. So it's basically SME sector. So in that SME sector, what kind of things are usually noticed and observed? That is what I am sharing. So here, in this particular case, that younger director said that that was a violation under the Companies Act, and in SME sector, like people like you and me, I also belong to a very average kind of chartered accountants. I have not fallen from the heaven. In fact, ever since I started representing the disciplinary cases, that time actually I am so much afraid of doing this profession, and I have lost my sleep. And therefore, by telling these stories, I have a sadistic pleasure that I will see that you lose your sleep for at least 1 or 2 nights. So this person, the misconception is that this signing by 2 directors is subsection 3. Earlier it was section 215. Now which section under 13 Act, I am not very sure. But basically this wording is the same, identical. So this subsection 3 says it's the signature by 2 directors. But the main section, subsection 1, says that the account shall first be approved in the board meeting. And then in that board meeting, the board authorizes 2 or 3 of them to sign on behalf of the board. So remember, what is of supreme importance is the approval in the board meeting. But we chartered accountants, we render so much of service to the people, to the clients, that we only help them in finalizing the accounts. We only help them in presenting it in the prescribed format. We only prepare director's report, notes on account, sometimes even MRL also we prepare, management representation, everything we prepare. Because the client's perception is that he is not concerned with that. All these regulations, all these whatever compliances are there is for you people. It is no value addition to me. I am not concerned. In fact, that is a great folly that we should now correct, is that we should educate the client and explain to them the gravity, saying that this is basically their primary responsibility. But that we don't do. And therefore, we invite all the troubles and burdens on ourselves. And we prepare all the papers and just give it for their signature. But we, for our own safety, do not prepare one simple letter. It could be a stereotype letter also. Every company should give you a letter that these financial statements were approved in the board meeting held on such and such date. This has a great significance, friends, because why I'm telling you, my experience is that usually from our business clients, out from the group, only one person interacts with us usually. Others are either disinterested or are not conversant with the paperwork or the financial work. So only one person interacts. But when there are disputes, all other persons, like all other directors, all other family members, they just disown everything. they just say that this person from on our behalf had some collusion with the chartered accountant and he has done lot of gafla in that. So this is the normal situation that occurs, because another defect with the chartered accountant's profession is that we are least bothered about secretarial compliances. We do not even see, we are not even inquisitive about the minutes, whether the meetings are properly held, although we simply rely blindly on the company secretarial compliance audit, if at all it is there. But it is in your own interest, because company secretaries are also certifying it in a very loose manner. So friends, it is in your own interest that the basic things of secretarial documentation you should verify. Whether the meetings are properly held, whether there is an attendance record, whether the resolutions are properly passed, and whether they are recorded, and wherever necessary they are uploaded. So long as that affects your audit work, at least that much you should ensure. So friends, in this particular case, the secretarial compliances were not seen, because that we never see normally. And because of this particular person, since they did not obtain this particular letter, so that is why I strongly advise that in all such instances, you obtain at least one hard copy, which is a master copy with you in your file. You obtain signatures of all directors, not only 2 or 3 directors, all managing committee members, all trustees, all partners of the client, that you should obtain. Why? Because at least nobody can say that we were never aware of the balance sheet, because otherwise people coolly say that we have never seen the balance sheet, they were never shown, the meetings were never held, there is not a single record that I have received no notices whatsoever about any meeting, and therefore they disclaim everything and they say that there was a collusion between the chartered accountant and their own representative. So this is the reality of life. Therefore, you should have a master copy in your file which is signed by all of them, so that at least they cannot argue that they never were aware of this. So this is again a very practical tip that I am giving. I am continuing with that story. The second ground of complaint is also interesting, and it is again very eye-opening. It says that one of the cars of the company was registered only in the name of elder brother. It was not registered in the name of the company, and there is no remark whatsoever in the audit report about this fact. Now you will argue, most of you will argue that how does it matter, because under the income tax, we get depreciation even if it is registered in the partner's name or director's name. But friends, merely because you get depreciation in income tax is not decisive factor when it comes to audit. Because in income tax there is a concept of beneficial ownership. Whereas under the Companies Act, or whenever you are certifying something, the asset of an entity, it is your primary duty to verify whether the asset is really registered or in standing in the name of that entity. And I don't think many of us are even aware of this particular requirement. And another point is that if these simple things, since we are not aware, we never tell our people like, we are very much lacking to our articles. We only curse them, saying that articles are not of much use. They are more is related to the practical work. This is done not by holding seminars where 1,000 or 2,000 students are appearing or attending. This can be created only by small workshops. Even the chartered accountants need to be trained on this by holding workshops, because sometimes after about 8 to 10 years, the knowledge becomes outdated. And therefore, this is the branches and all should organize small workshops for the intensive training. And there is an importance of documentation. That documentation, who is going to do the documentation? The documentation is going to be done by our articles, by our staff, by our assistants. If they are themselves not trained, if they are themselves not aware of what is required of them, how will they prepare the documentation? The mantra for audit is documentation, papers. In fact, there are the two maxims in this slide you can see. That two maxims you should constantly bear in mind. One is work should not only be done, but it should be seen that it is done. That is working papers. We have hardly any papers. They do 80% of the work and only 20% of the paperwork. Whereas the big four, they do only 20% of the work but have 80% of paperwork. In the sense, they create papers to just show that they have done a lot of work. This is very, very disturbing to produce working papers. In fact, in the institute is conducting 7-day course, certificate course in working paper management. And I also shared my PPT on working paper management just as an add-on thing, or as you can say, one on free, because this I'm speaking on code of ethics, but working paper management is also the PPT I have shared, and that can be shared with all the members. So work should not only be done, but it should be seen that it is done. Working papers, notings are extremely important. Now I will share with you a very recent case that is now disturbing many of us. And the next maxim is, faintest of ink is stronger than the strongest of memories. Howsoever great memory you may have, but ultimately everything needs to be written and documented. You may call a client 100 times. You may make a phone call, you may send messages, but unless you write to him, there is no defense for you. You cannot say, I was telling him many times, but he did not listen. No, you show. In fact, today's culture is that in large corporates and in big firms, even a person sitting in your next table, neighboring table, you have to communicate only by email. There is no oral communication which can be validly believed. Therefore, you may say that you are taking a leave or you are going for half an hour. That you have to make a record. You cannot simply tell somebody and go. For anything that you are doing, it is to be documented and should be in writing. In fact, that has increased the stress of many people. Young chartered accountants are dying because of such type of stress. Earlier, everything was in with pyar, mohammed and affection. We used to tell informally people, but now you cannot afford to do that. There has to be a written communication. People ask you where you have written to me, where you have told me this, when you have told me this. This is the case. These are the things which are happening. Not only the disciplinary cases, but in courts and everywhere. Any dispute, there has to be a written communication. For example, in that very first case, husband and wife, it is unbelievable that wife is not aware that the husband is doing the audit. So, but still she expected, now when it comes, when the context differs, then she expects that there has to be a communication in writing. So this is the culture today. The work culture has become like this today, and therefore we have to be constantly vigilant and constantly awake that whatever you are communicating, we are very poor in communication skill. We are bad communicators, and that will not improve by just GMCS. That has to be inculcated right from early childhood, or perhaps at least from our training period of 3 years of articles. No communication is there. In fact, we are not able to say no to anyone. The communication should be firm. In fact, there are many complaints sometimes that a charitable trust or a society, there are typically some miscreant members are there. They ask some information from the auditors. What does the auditor do? He doesn't even respond to them. He doesn't write to them. And he says, I am not concerned, I am not answerable, I am not liable to give them information. In fact, I cannot give information because I cannot disclose the secrets of the client. All that he argues, but he never writes to them. See, the professional courtesy and etiquettes demand that whenever somebody is asking you, getting some information, you tell him that I am not supposed to give, I am not supposed to be maintained, I am not the custodian of the client's record. And even if I had the record, it is not possible and permissible for me to share that with you. You please approach the management, one simple letter, but they don't write. So that person writes 3 reminders and then his ego is hurt. Most of the complaints are filed just because someone's ego is hurt. So that how you avoid that is by a simple polite letter. whatever you are saying now, you should have written to him that I am not able to give you that. But we don't do it. We are very lazy in written communication. In fact, many times, many people are under an impression that all this code of ethics and all applies only to attest function or assurance function or audit. They are mistaken, friends. Very few of the items are applicable only for audit. Otherwise, entire code applies to advisory function also. For example, if somebody is asking you any advice on income tax, what they do is they make you work. So they ask you some query on phone and you do a lot of research and you give an opinion. And finally they say, no, we dropped that idea. So they are very cool about it. But your efforts are gone. Moreover, what he communicates, the facts, and what you have understood, there has to be clarity in writing. And therefore, always develop a habit that whenever a person asks you such queries or such opinions, ask him to give it in writing. And there should be a communication as to what were your counter questions, what facts you asked for, and accordingly, what facts you have understood. On that basis, you are giving an opinion. Otherwise, sometimes we carry some impressions, we carry some assumptions. And on that, if you give an opinion or advice, that is likely to be defective. Therefore, writing habits are to be developed. Don't say anything, because then otherwise, if there is no clarity, the client says that you had told me this only. And there is no proof with you that what you had advised. Therefore, faintest of ink is stronger than the strongest of memories. This maxim you should always bear in mind, and work should not only be done, but you should be seen that it is done. What another thing I observed is that we are obsessed too much only with the income tax. There was a generation about 10 to 15 years ago, or rather when we did our article, our seniors, they recognize only income tax. That time even chartered accountants were not doing any indirect tax work also. Only income tax was the Bible for them. So company law, audit principles, everything was subordinate. Everything was secondary. But now you cannot afford to do that. And therefore, these communication skills need to be developed. Now, actual cases, this slide I have already dealt with. Very interesting. One chartered accountant proprietor was there, and that proprietor, he had close friends. About 4 partners were there. All 5 of them had done their articles together. So they were very close friends. Now, this 4-partner firm, their tax audit was signed by this proprietor firm. See, and that collection in the year 2005 was 4 to 5 crore rupees. So it was a good firm, mid-sized firm. Unfortunately, this chartered accountant who signed the tax audit, that firm's scrutiny assessment was there, and in the books, the cash book printout was asked for, and in that there was on one particular day a cash negative of 432 rupees. Now, 4 crore rupees is the collection, but one day cash negative of 430, because it is purely negligence. And the audit team also, there was no training that at least because you have all the technology at your command. So you could easily verify whether there is any cash negative on any day. In fact, I have handled 3 or 4 such cases that chartered accountants are loosely signing. There was a charitable trust in which there was cash negative. And finally, we could overcome that. We could explain to them why it is actually not a cash negative, because all the entries were put at the end of the month, and therefore some such discrepancy was occurring, but otherwise it was not. So all that's explanation is immaterial. But the fact that in the accounts cash negative is appearing is very disturbing. That should have put the auditor on guard. But unfortunately, in good faith, we do this. In good faith. Therefore, my first principle, and many principles I have told you so far, as far as possible, my next advice is that be very cautious about the cooperative societies audit, or as far as possible, you avoid cooperative societies audit. Because in the cooperative societies, there is usually nothing but non-cooperation. So, the cooperative societies, especially in housing societies, there are typically some members who are bent on creating some trouble or the other, because they have some grudge against the managing committee, They have some reservations on the auditor, and to harass the managing committee members, they harass the auditors. And there was one particular, the working paper importance and the cooperatives, both these now points I am making clear by one particular case that I handled. There was a cooperative housing society who had sold some FSI for a huge amount. And one lady was there as a auditor, she was a CA. Now, there was no issue in the income tax. Everything was under 143(1). It was smoothly done. But there were some partners who were members who were disgruntled members. They wanted to harass the managing committee. So they filed a complaint saying that according to us, this particular FSI sale proceeds are taxable. And we will go to the income tax department, ask him to issue 148 notice. We will pay interest, tax, penalty, and we will recover it from the auditor. This was their complaint. Now, they were asked as to why they are doing so. They said, we are very honest citizens of India. So that means, so basically they wanted to create nuisance value. Now, the reaction of the chartered accountant lady was that, how am I concerned? Because I am only an auditor, I am not a tax consultant. This is again a mistaken belief. Because there is a separate standard on auditing which says that which other laws you are supposed to take cognizance of. So there are certain acts which you are supposed to take cognizance because they are having a direct financial bearing on your financial statements. And therefore, you cannot say that a huge value was received of the FSI and I am just silent about it in my audit. You cannot say so. So what she should have done, if she was aware of the taxability of FSI, she should make a note for herself and keep it in the file. That is a working paper, that is a working note. But if she is not competent to decide on that taxability, then she should obtain an expert's opinion, third-party expert's opinion. So these are the two options that she should have done. So this is the value of working paper. So you justify as to why you did not consider it as taxable, or otherwise you say that why, what is the correct view that and why this view you adopted. So this is simply nothing but the value of working paper and the attitude of members of the cooperative society. Now I come to the legality, the act, basically Act, Chartered Accountants Act. As Nilimaji mentioned in her introductory remark, there are 3 volumes. Volume 1 is based on the international ethical standards, which are adopted by the Indian Institute for our situation. Second is actually the statutory part. That means Act, rules, regulations, guidelines, notifications, these. And part 3 is the case laws. Frankly speaking, case laws has not much value because basically each case is different. There's hardly any 2 identical cases. But now I am sharing with you some recent experiences. The recent experience is that even right from the appointment, you have to be vigilant. People are so much careless about their own appointment. And there is clause 9 of part 1 of first schedule which says that you have to first ensure that you are appointed properly. You are appointed in a valid manner. This is your first duty. Now, there is a big, very large corporate, an NBFC, which is engaged in the housing finance. And there was a big scam of 31,000 crore rupees in that NBFC. Now, they had the practice of appointing statutory auditors in the annual general meeting. But perhaps their resolution was silent about the branch auditors. Now, the company used to appoint branch auditors in consultation with the statutory auditors. So the appointment letter read like this, addressed to the branch auditor. There are some 200 plus branches and there are some 30-40 branch auditors. So basically the letter was issued by the company to the auditors, branch auditors, saying that in consultation with our statutory auditors, we are appointing you as auditor for the branch. And then terms and conditions, the methodology of audit, everything was stated in the appointment letter. The audit report was addressed to the statutory auditors, but the fees were paid by the company. So because of this, now all those cases have been taken up by NAFRA. And NAFRA has issued notices to all the branch auditors saying that your own appointment itself is invalid because it is not done in the AGM. Now this is happening for last 15 years. And see, all professionally qualified people are at the helm of affairs of that corporate. And there are company secretarial department, company secretarial auditor, everything is there. But this particular thing was, rather it went unnoticed for so many years, and this was a trend every year. So this is the fact that why we are not very particular about the secretarial level. We presume indoor management. We believe indoor management, and we say that no, everything must have been done properly. This is a wrong concept, that don't trust anything. Have professional skepticism. Apart from the technical parts of standard on audit and all that was there, but the thing that has, second thing they have done, and we are very much lacking in that, is that they said you have not written any engagement letter. Now engagement letter, hardly any SME firm writes. After the appointment, even the appointment letter we were not very particular about. Only because now it is to be uploaded to the ROC side, now we are insisting on appointment letter. Otherwise, there was a time when even the appointment letter was not even insisted upon by the auditors or chartered accountants. It is only when the government makes something compulsory that we act. Otherwise, on our own, we are not compliant. So this is the unfortunate part of our CA profession. So we should be particular about our own safety, that we are easily sacrificing. So engagement letter here means once you take the appointment, engagement letter is the description as to how you are going to perform the audit. What will be the sampling, who will be the, how many, what might be the team that you will be sending, how long it will take, all these things, which will be the places you will be visiting, all this is stated in the engagement letter. But engagement letter, any one of us issues. So now they have taken up, because once, see, jo pakada gaya wo chor, otherwise all are doing some, committing the same default. But now that it is revealed, see, many times chartered accountants, they say, once a complaint is received, they say 30 years I have unblemished career, that there was no complaint against me. But the real reaction to that is that you are not, there was no complaint against you, so you should consider yourself as lucky. Because otherwise, every day, day in and day out, we are committing some misconduct or the other. Therefore, as I said, the pakada gaya wo chor. So just because you are not caught so far does not mean that you are doing everything proper. So please introspect. Whatever things I am telling you is for your own introspection. I am not underestimating anyone, but even if you are knowledgeable, it is our duty also to impart that knowledge to our trainees, because ultimately the work is to be done by the trainees and the staff. And if you are not particular about it, just by holding large scale seminars, the students are not going to learn because they don't have any interest. Their concept is that audit is nothing but vouching. They cannot even think beyond that. Even the audit report, the wording of the audit report, I'm told that now Institute is also making compulsory that standards on auditing also should be mandatorily forming part of your CP, because merely ethics is also not sufficient. Ultimately, in ethics, how you observe ethics, by following the guidelines of the Institute, accounting standards, standards on auditing, and other notifications and guidelines. Therefore, the standards on auditing, it says that you have to write an engagement letter. So if you don't write engagement letter, again, it's a violation of SA. So I'll come now to the statutory part. Then I will again come back to another important set of cases that are coming up. See, friends, Chapter 5 of the Chartered Accountants Act 1949, which was majorly amended in the year 2006. Thereafter, again, there was a small amendment in respect of the LLPs, but otherwise, the present code of ethics, or you can say the mechanism, is now as per the new act, that is 2006 Act. Chapter 5, Section 21 is the starting point of the disciplinary mechanism. Section 22 defines a misconduct. It defines a misconduct saying that any item stated in Schedule 1 or 2, there are some 34 items together. If you see 19 items in the first schedule and 15 items in the second schedule. So any of these items, if you commit, is a misconduct and includes other misconduct. Other misconduct means bringing disrepute to the profession or a behavior or conduct which is unbecoming of a professional. So there are, as I told you, there are even dowry cases in that. But now I am telling you the recent decision of the High Court that whether it is necessary to see that a chartered accountant's conduct is to be examined only if he does something in his capacity as a chartered accountant, or whether he is present as a chartered accountant, or his presence is there in any capacity, not as a chartered accountant. Even then, whether the code of ethics applies to him. And I'll give you an illustration. That if a chartered accountant misbehaves with a female, now whether it is necessary to see that he does it in his office or in another CA's office or in a CA conference or in his client's office, where his presence is essentially in his capacity as a chartered accountant. Or even if he has gone to attend a private function, or even if he is on a holiday tour, even there if he misbehaves like this, whether still the disciplinary mechanism or the code of ethics apply to him. And the High Court said yes, wherever he goes and in whatever capacity he is present, the code of ethics will apply. Why? The logic is very simple and straight, friends, and it is convincing that whenever such thing happens, how the press report and social media reports it, it says chartered accountant held for bribery, chartered accountant held for masterminding a scam. So chartered accountant image is tarnished in the headlines. And then what is the concept then that, or what is the impression created in the society? Chartered accountant लोग ऐसे ही है, वही bribery करते हैं, वही गोलमाल करते हैं, वही गोलमाल सिखाते हैं. This is the perception. This is the impression among the common people. Therefore, wherever any scam takes place, the first question is, अरे auditor क्या कर रहे थे? That is why people means this mistaken or rather improper reporting is done. That applies to all the professions. An advocate held like this or a doctor does this. The entire profession's image is tarnished. And our institutes and our councils' sole objective and duty, they say, is to maintain and uphold the reputation of the profession. So even if some few quacks are misbehaving, the entire profession image is hampered. And therefore, friends, wherever you go and whatever you are doing, your behavior should be exemplary. Secondly, there was one more very landmark decision of the Bombay High Court saying that an auditor is only a watchdog and not a bloodhound. But this principle is also diluted now. Now people expect, the regulators and the government expects that you should be bloodhounds only. You should be able to detect the fraud. And moreover, friends, if you introspect, there is an observation everywhere in the banking sector or everywhere that there are so many types of audits in the bank. The concurrent audit, revenue audit, stock audit, internal audit, statutory audit, systems audit, everything is there. But there hardly any occasion where any big fraud was detected by the audit, was exposed by the audit. It was exposed by some happening which had nothing to do with the audit as such, and therefore then the auditors get the blame. And remember, the scope for audit work is also curtailing. The banks are getting merged. The tax audit, the amount limits are getting enhanced. And therefore, friends, now the profession has to very seriously introspect as to how we maintain our own value and indispensability. See, people don't consider us as indispensable. In fact, in the economy, there is a concept that there is a difference between need and want. We need to study, but we don't want to study. We need to do exercise every day, but we don't want to do. Similarly, people need ethics, but they don't want ethics. Chartered accountants need to study and upgrade, but they don't want to because they are lazy about it. Because they say it is too tiring. And partly it may be true because the government system, the government machinery is also working in such a way that their knowledge is very rarely respected and honored. And therefore, see, it's not a double-edged thing, or we can say a two-way traffic. But their actual leaders must we should be asset and we should be able to put our foot down and say that we will not talk nonsense. We will say that it is easy for CN Vaze to speak on the dais and make such statement. But I am clear in my mind why we are not assertive is that we have become spineless. And why we have become spineless? Because we are not united. You will never see that chartered accountants have collectively done something and made a representation. We have never seen chartered accountants taking out a morcha. No, I'm not provoking that we should take a morcha, but ultimately our collective strength is never felt by anyone. Government does not care for our representations because they consider that chartered accountants are government servants. That means because there are government's laws, we are having our survival or subsistence. And that is why we cannot raise our voice. But there is a lot of injustice to the profession. Many authorities, many bankers insist on irrational, unrealistic certificates from chartered accountants. Many banks insist that chartered accountants should sign or certify the provisional figures. So all this is there, but we cannot resist.
Sorry, sir. Please continue.
We cannot resist because we are not united. Clients take undue advantage of this situation. They know that if one chartered accountant refuses to sign a particular financial statement, there are 100 others who will jump on it and sign. Sometimes in a lighter vein, I say that even rickshawalas and sabjiwalas are better organized and united than us. Because if one rickshawala says no for a particular destination, there will be 10 others who will be saying no. And then you may have to go to some other place to get some other rickshaw. Why? Because they are united. We are not united, and therefore the people take advantage of this situation because there is undue rivalry among us. We meet only to discuss academics. We meet only to discuss, to cry among ourselves that system is bad, that in department is not cooperating, department is a corruption, the regulation is too much. But we, for example, friends, when the exposure drafts are released by the institute or by the government about any amendment, how many of us do the representation? How many of us care to study it? And you cannot expect our leaders, so-called professional leaders, to do anything because we don't elect them also properly and in a healthy manner. We proceed only on the basis of caste and community. So we are not educated voters. We are in that sense, we are illiterate voters because we never see who is the meritorious candidate. That we never see. We only see that he belongs to my community, he belongs to my region. And that is why you can't expect that leaders, so-called council members, will have any impact as such. And therefore, we as a community have to collect. We are not doing anything to raise our voice or public opinion. We are not writing articles in the media. We are not writing anything to at least voice the difficulties faced by the chartered accountancy profession. That clients are taking advantage, they are not paying our fees, the most underpaid profession, and even there are difficulties in getting the staff because it is people are not looking at our chartered accountancy office as a long-term employment. Therefore, friends, all these realities, if they are there, then we should have courage to voice these because ours is the most difficult examination in the country. But then every year that updation, and also let me come back to the act. So misconduct other misconduct is a very wide connotation. That is what I wanted to say. And another thing is that watchdog and bloodhound concept. Now there are two schedules. What is the difference between first schedule and second schedule? First schedule offenses are those where the aggrieved party is only within the profession. That means the profession is affected. If you commit any misconduct in first schedule, it is only the other professionals who are affected. For example, communication with the previous auditor, or verifying that your own appointment is validly done, or solicitation, or advertising, or for example, not doing some business or occupation without obtaining the permission of the institute, where outsider is not affected. So outsider is not affected. It is on the internal thing. That is why this is looked upon as of a lesser gravity. The punishments are also accordingly milder for first schedule offenses. Now also they are making it more stricter. That is a different story. But still, by and large, the punishments are a little milder in respect of the first schedule. Second schedule is the one where an outsider is affected. The aggrieved person is outside the profession. For example, your gross negligence, your lack of due diligence, your misstatement in the report, or you are not keeping the client's money in a separate account, or you are certifying the financial statements of a relative. All this actually hampers your credibility. If that is the situation, that is why it is second schedule, and second schedule offenses are considered to be of more gravity, more intensity, and the punishments are harsher for second schedule. So this is broadly the distinction between first schedule and second schedule. We will see the actual difference there in the sense when we go clause by clause. Now, these provisions which are relating to misconduct, the procedure as such, let me mention that there are 4 authorities under the Act. Now, 4 authorities under the Act. Before that, I may have to point out one more interesting case, that sometimes you simply can't imagine as to where from the complaint can come and at what point of time the complaint can come and who will complain. It goes beyond your dreams, even imagination. You would not even dreamed that such complaint can come. Very interesting illustrations I can give you. See, Mr. A was a chartered accountant, B was an engineer. They were very close friends and they were doing business of manufacturing in a private limited company. Both were acting as executive directors because there were only 2 directors. Now, A had continued to hold the COP just for the sake of sentimental reasons. So, sentimental reasons because he had earned that degree, but he was not very active in practice. Now, B's son wanted to do CA. So, what he did? B's son did the articleship under A. And B's son passed the CA, he joined some corporate employment. And then, as I mentioned, there are actually disputes which are bound to occur after a while. So after 25 to 30 years of business relationship, there was a dispute between A and B. And all sorts of complaints were there against each other. In criminal cases, in income tax department, in arbitration, in CLB, in high court, everywhere. Now, to add fuel to the fire, B's son filed a complaint against A, his own boss, his own ex-principal, under whom he did articles. What was the complaint? That Mr. A was acting as an executive director without obtaining the permission of the institute. Remember, that had nothing to do with his articles. In fact, he did his articles under him. Still, when the situation changes, people's mind changes. Unki buddhi bhrasht ho jati hai and they file a complaint. Now, one particular fact in the old story I forgot to mention to you, which is relevant here, that director who filed a complaint on 2 counts, that only one director had signed and car was, you will wonder as to why he filed a complaint. पर्दे के पीछे क्या होता है, that I will be sharing with you, कि why he filed a complaint, because the 25 years of relationship, reputed firm, reputed private limited company. The only reason why he filed a complaint was that he had approached this firm with a request to accommodate his daughter as a dummy article, which the firm refused. So out of vengeance, this complaint was filed. Are you getting my point that it is ultimately you cannot afford to antagonize anyone? That is why you need to develop a communication skill. What might have happened was that there were highly old principled old type partners were there, old Jamane ke. So they said, Arey, we have never accommodated even our sons and nephews and nieces as dummy articles. How can we take your daughter as a dummy article? They might have told it in a very curtly, and perhaps that had offended him. But if they had done politely, tactfully, saying that it is not in her interest to do so, that it will be better that if she, in the course of that, she studies something, probably things would have been different. But the flat refusal probably has offended him. So once the ego is hurt, the complaints are getting filed. And this we have to constantly, that is why communication skill. You will otherwise ask what has communication to do with the ethics. Yes, it is very much relevant because you don't communicate the things properly, therefore people get agitated. So there are 4 authorities under the Act. First is disciplinary directorate, director discipline, under whom there are employed people who are bureaucrats mainly. That means they are chartered accountants and advocates, lawyers, qualified people. And director discipline is the head of that department. Now, their job is firstly to receive and process the complaint. Their first stage is this, director discipline. Next is board of discipline. Board of discipline now consists of 3 members. They deal with the complaints under the first schedule. There are 3 members, and now I'm mentioning to you the trend of the government's thinking. Now there are 3 members. Earlier there were 2 central council members and 1 government nominee. Now the recent amendment, very recent amendment, not even a month ago, they have made it as there will be 2 government nominees and only 1 central council member, and a presiding officer will be the government nominee. You can imagine what is the trend now of the government's thinking. Similarly, disciplinary committee, which consists of 5 members, again, now only 2 central council members and 3 government nominees. Earlier, it was the other way around. And the presiding officer will be again central government, the government office nominee. So now it is clearly that our influence on the decisions about the disciplinary matters is getting reduced and it is diluted. There is a need for awakening for all this. We are not even aware that these things are happening, and even if we are aware, we are not doing anything. The organizations like yours or for the branches and the study circles, they are not organizing the collective thinking and collective wisdom of the members, and it is not made known to the government. And we are unnecessarily spending our time on too much of academics. So my appeal to you, very urge to you, is that be very much awakened and conscious about our own future and rights, because otherwise what is there left for our next generation? In fact, there is a worldwide study that shows that the professions which are likely to be outdated in next 5 to 10 years because of the automation, chartered accountancy is one of them at the top. Because now you will see that because of the automation, our scope is reducing. Now when there are online audits, everything is mechanized now. And therefore, friends, it is very essential that we are awakened. And unfortunately, that is lacking. So this, I have taken it as a mission to spread the awareness, but everybody has to rather take up this very seriously, and it is at organizations level that it should be done. So disciplinary committee I have mentioned. Then the appellate authority. Appellate authority, again, it consists of 5 members. It is presided over by a High Court judge, 2 government nominees and 2 ex-Central Council members who have completed their full term of office as a Central Council member. So this is the constitution of appellate authority. Now we go to the important pronouncements, as I told you, guidelines, accounting standards, standard on auditing, all these are there. The constitution of these authorities I have already explained to you. Now I'm coming to very important aspect, the important principles of the disciplinary mechanism. First and foremost is that the proceedings are commenced either on the basis of a complaint or information. What is the difference between a complaint and information? The complaint has to be in a prescribed form and there is a prescribed fee of 2,500 rupees that the complainant has to pay. Whereas when information is concerned, it is only the information that is passed on to the institute. What is the difference? Once the information is passed on, the director discipline writes to that informant, and usually the regulators are the informants. For example, ROC's office, SEBI, Income Tax Department, they are, and I will give you with illustrations as to how it happens. So this is basically, once it is an information case, the institute writes to them whether they want to file a complaint. Otherwise, if it is merely information, then you have no right to participate in the proceedings. It is only an information. So institute will only let you know the results. Whereas in a complaint case, the complainant is constantly in the picture. At every stage, complainant is there. Both the rival parties are there. Whereas in information case, informant is not in the picture. This is the main difference between complaint and information. Then secondly, although there is a suo motu power, but then ultimately they have to first verify. Just because there is a press report, institute immediately doesn't jump into start the proceedings, but they verify as is there any substance in that, and then only they start. But basically complaint and information. Now, second principle is, and very important, all these principles are extremely important, friends. Complainant need not come with clean hands. This is very important. What happens is, usually when a complaint is filed, the respondent says that complainant himself is a badmash admi. He says that he is a bad person, he is a criminal, he does all the bad things, and now he is filing a complaint, although I have helped him so much. And remember, friends, there are at least 8 to 10 complaints which I have handled where the complainant was a confirmed convict criminal behind the bars. He was in jail. But our institute says, and rightly so, our council says, we are not concerned with the complainant's behavior. We have no jurisdiction over the complainant. If he is a bad person, there are other forums where you can proceed against him. We have to only ensure that our member works properly. The reputation of our profession is there only when our member does the job properly. If suppose you can, if you see that institute has jurisdiction over the outsiders, then it has no end to their duty. There will be thousands of complainants and everybody, if every time they try to analyze his behavior, there is no end to the duty. They say, we are not concerned with that. We are not aware. It is a very narrow view and which is a right view. That does not mean that they totally ignore that the complainant is a criminal thing. It's not that. They do give weightage to that what is the motivation behind the complaint. But fact remains, motivation behind the complaint is not that relevant. It is not that decisive. Ultimately, you have to prove that you have discharged the duty as a member properly. You have done the right job. Once that is established, the credibility of the profession is established. So remember that council has a very limited objective, and that is right. That is correct objective, that your work should be proper. Now, next in that sub part of the same principle is that the local standing of the complainant is irrelevant. You cannot say that a complainant says complaint ka kuch lena dena nahi hai. That means, suppose there is a company, the complainant may not be a shareholder, may not be a director, may not be an officer, may not be an employee. He is not a vendor, he is not a supplier, not a service provider, not a customer, not a depositor, not a lender. Nothing. He had no connection with the company, and still he can file a complaint because the proceedings are treated as quasi-criminal proceedings. And therefore, any person can file a complaint, and unfortunately, friends, you will be shocked to know that there are professional blackmailers in our profession. There are professional blackmailers who pick out any balance sheet and find out the flaws in that and file a complaint. In the course of my practice, I have come across at least 2 such persons who had filed a complaint just to harass the chartered accountant, to blackmail him. So this type of thing is also there. So it is not that you will say that I'll maintain good relationship with all so that nobody will file complaint against me. It's not that. Ultimately, there are people with ulterior motive, there are people with vicious motive, and they are also capable of creating nuisance and harassment to you. So this is another thing. That locus standi is not important. Perhaps it could be a matter of representation, that ultimately that person should be connected with that particular thing. But we are not even aware of this principle. That is why we are not doing anything on that. The next principle is that there is some good case law on this. That is why I am just referring to the notes. But the next principle is about the withdrawal. Friends, earlier under 1949 Act, till the year 2006, withdrawal of complaint was not permitted. In between, they permitted the withdrawal. Again, under the latest Amendment Act, again, which is effective from last month or so, again, withdrawal is not permitted. So complaint once filed cannot be withdrawn, and never as a matter of right. But they have added one procedural thing which is very good, that if at the time of complaint, the director discipline finds that this is a very meaningless and frivolous complaint, it will consume disproportionate time and it is a trivial complaint, perhaps they can refuse to entertain that complaint at the threshold itself. This is a very new power that has been given. Otherwise, you make any trivial complaint and it will take at least 4 to 5 years for the disposal of that complaint. This is the system today. And there is a lot of pendency. Hundreds of cases are pending. Every day, on an average, perhaps 2 complaints are filed today. So you can imagine that this director discipline or the disciplinary directorate and the disciplinary mechanism is overburdened. That is why earlier there was only one disciplinary committee. Now there are 3 benches of the disciplinary committee, because the pendency is so much and the government is pressurizing that we should dispose of all the pending disciplinary cases. So this is another thing. Now, one more principle is that the council has power only to deal with individual members and not against the firm. So they don't have jurisdiction over the firm. They have jurisdiction only against individuals. But under the recent amendment, although they don't have jurisdiction over the firm, they have been given power that if it is a repetitive guilt in one firm, suppose one partner is held guilty today, and within 5 years, if some other partner or the same partner is held guilty again, then the council has power to punish the firm. But the proceedings are not against the firm. Remember, proceedings are against the individual members, but they can punish the firm. So this is another change that has taken place. That is why I had to refer to my notes. Now, next principle, again important principle. We chartered accountants are very much concerned and very much inquisitive to know as to what is the time barring. So that if I tell you the time barring is so many number of years, then people will be happy that अरे हमने जो sin किया है, जो पाप किया है, वो 10 साल पहले किया था, तो now we are out of it, जान छूट गई. So now, what is the time barring concept here is very interesting and very important. Loosely, it is 7 years. Loosely, the complaint has to be filed within 7 years from the date of the occurrence of the event complained against. So, for example, date of signing the balance sheet. From that, within 7 years, you have to file a complaint. So, this is the basic principle, but there is a rider to it. What is the rider? The director should be satisfied that the production of evidence is now very difficult or impossible, or it is otherwise impossible to continue the proceedings and take it to the logical end. He should be satisfied. If for example, if your offense or your default is self-evident, there is no other evidence required. No other document is required. It is on the face of it, you can make out that this is a misconduct. Then this protection is not there of 7 years. It could be even after 15 years. And I'll tell you a very interesting story for this. Story in the sense, actual case. There was a lady who had prepared a will, and she died after about 12 years after preparing the will. When the will was opened, it was found that the chartered accountant had signed it as a witness, but the lady testator had not signed at all. That means when you are signing as a witness, people will say, "Arey, to kya hua? Usme koi kya badi baat hai?" Actually, this is a false statement, because when you are signing as a witness, you say something like an oath that that other person has put her signature in my presence. She has put the signature and I have witnessed it. So witness has got a very onerous duty. You cannot lightly sign as a witness. See, when we sign audit report, there we are not signing as a witness. So that time those dates can differ. Our date can be later on. But when you are signing as a witness, it has to be done in front, usually. That she has signed before you and you have to be putting that signature. So usually it is on the same date. So remember that as a witness, your duty is different. And here, after 12 years, it was revealed, but still it is self-evident. There is no other evidence required. And therefore, this time barring of 7 years is a very loose type of time barring, where you have to really prove that now obtaining evidence is very difficult. For example, bankers file a complaint against the auditors. And now that company, in whose case the complaint is filed, is now in liquidation. And all the papers are with the liquidator, and about 15 years ago, it is in liquidation. Now it is almost impossible to obtain those papers. So evidence is difficult. But had it been self-evident, for example, certain things you have not reported at all, your report is silent on certain part which is mandatory, then it is self-evident. I'll tell you about a story about this. And you cannot imagine in what context and under how many years that your case can come up. And people are sometimes rather in a bliss of ignorance. There is an executor and trustee company. What they do, they execute the wills of their clients. So in one executor and trustee company, one gentleman who was dead, who was deceased, his will was being executed. In the sense, it was being given effect to. That person's daughter was interacting with the company. She said that the interpretation of the will should be in such a manner that she should receive this kind of property. The officers were not agreeing with her, nor the managers. So she wrote to the directors that the officers are not doing a proper job. The director did not respond to her. So what she did, she engaged some other chartered accountant to find out the loophole, because she said, now I will teach lesson to the directors. So to find out the loopholes and drawbacks in the financial statement, she engaged another chartered accountant. He said that in this audit, some technical lacunae are there. For example, in one or two accounting standards are not reported on, like AS3, cash flow statement, or AS8, for example, 18, for example, related party transaction. That had nothing to do with the true and fair view and absolutely nothing to do with her grievance. Her grievance was that she did not receive proper allocation of the property from her deceased father. But now she wanted to teach a lesson to the directors. So she filed a complaint to the ROC. ROC summoned all the directors and also the auditor. They explained that this is a frivolous complaint and that lady's motivation is totally different. And ROC agreed. He said, but now the complaint is before me, so I have to complete it. So that means, so it was compounded. Composition money was paid by the directors, 5,000 rupees each, and the auditor. All were happy. Directors were scot-free now. This chartered accountant also felt that the matter is over. Unfortunately, in all such irregularities, the regulators submit this information by way of information to the institute. Now you will understand what is information. because ROC was convinced that this, because of this technical lacunae, it is not very serious in the sense that it is not affecting the economy, financial things or anything. But it is a drawback, it is a lacuna, it is a shortcoming. Therefore, such things are usually taken up as matter of information to the institute. So now you will understand the difference between complaint and information. Many such things. Suppose there are flaws, but those flaws are not very material and ultimately no one was seriously affected by that. Such things are usually transferred by way of information only to inform the institute that our members are doing this type of work or this type of service. So this perhaps will make it clear the difference between complaint and information. So now this 7 years and that I told you, information also, but now this person is facing the music of disciplinary committee for last 6 years, this chartered accountant, auditor, although the directors are scot-free. Next thing is, if even the respondent compensates the complainant, people are under an impression that this applies only to the audit function or assurance function. Again, I'm repeating that every function there is a scope for disciplinary case or code of ethics applies, even in advisory function. So here, suppose you have given a wrong advice to the client, in the sense that you missed out on section 50C of the Income Tax Act or section 56 of the Income Tax Act, and you never guided the client about it. So he had to pay the tax, interest, penalty, everything. So you go to him and you compensate him for everything. Still, you cannot undo what you have done. The fact remains that you have given a wrong advice or incorrect advice. And that is why your misconduct still continues. Remember, this is a very important principle that once you have compensated, in fact, there were cases which were actually fraudulent cases that a chartered accountant had prepared fake challans, income tax challans. Now, this is a fraud, this is a crime. Now, even if in that case, if he had compensated, how can leave him? The person who has committed a fraud, how you can leave him just because he has made good that amount to the complainant? So remember, you cannot undo what you have already done. So this is one next principle. Further principle is that it is immaterial as to whether anybody is aggrieved because of your misconduct or whether anybody suffers any loss. I'll give you two examples of this. One is, suppose there is a charitable trust which is 100% exempt and it is confirmed under section 143(3) and all subsequent appeals and other things that it is fully exempt. Still, if the income tax authorities find out that there is some lacunae or flaws in the financial statements and the audit, they can still file a complaint or information. And one such case was there in the south, in Bangalore, actually, when that particular commissioner had a lot of kunnas or vengeance against CA community. On one single day, he filed 11 such complaints against chartered accountants for trivial matters. For example, there was a trust where the large trust and all the governing body members were very reputed and dignified people in the society. The trust had 16 bank accounts, but the 5 of them bank accounts were totally inoperative, and that's what the management told the auditor. They said that they are inoperative. There are hardly any transactions in between transfers, but there is no transaction with the outsider in that. The auditor accepted this particular information or representation blindly. Good faith may he accepted. Then there was, so bank reconciliation was not there because bank statements were not available. In the subsequent years, another auditor was there, and that time the bank statements were found. And there was a small impact of 15 to 20,000 rupees because there was interest allowed by the bank on the charitable trust saving account. So the next year's auditor, what he did, he presented it in the balance sheet as trust fund, add adjustment of the previous year. Now in that also, the assessment was smooth, 143(3), nothing, no objection whatsoever from the income tax department. Unfortunately, in those days, ATG had to be renewed every 3 years or 5 years, just as again they have reintroduced that. Earlier, in between, there was no renewal of ATG required. So now that time, so while examining the accounts at the time of renewing the ATG, this discrepancy was noticed by the commissioner. So he asked what it is. And remember, friends, that just because there was no remark of the auditors about the non-availability of the bank statement, and even after you give the effect, even then there is no remark on anything, both the chartered accountants were held guilty and they were suspended for 3 months. Unfortunately for them, the matter went to the High Court because that time the system was that finally this thing was to be confirmed by the High Court. So the High Court said that this is too harsh a punishment. Therefore, they left them both of them on reprimand. So this is the way. See, havens are not going to fall even if they were written that 5 bank statements were not available, but we were informed that they were inoperative accounts and therefore the material impact on the accounts would be not material. Even if we had mentioned some statement in the audit report, I'm emphasizing all this because we are afraid of writing any qualificatory remark. Why? This is not even a qualification. We are just making it clear in the notes or in your report. And for that, you need not even write a disclaimer. You just say that, and in the MRL, this mention should be there. This is the fit thing which is to be explained by the MRL. So this is one illustration I gave you, that whether anybody is aggrieved or not. See, income tax department was not aggrieved as such, but still the income tax department filed a complaint because the commissioner's mindset was different. There are many such instances where income tax department or the revenue departments file a complaint because of the purely harassing the chartered accountants. So this is a one illustration. Although they were not aggrieved, no revenue loss was there. Next illustration I'll give. Suppose you sign a balance sheet of a particular client and the bank gives him loan and he services the loan very regularly and he closes the loan also. So bank has not suffered. Still, if the banker finds that there was a flaw in your audited statements, he can still file a complaint. Suppose you have some friction with the banker for some other matter, and if he is aware that in your bank's this balance sheet there is a problem, then he can still file a complaint. Therefore, remember that whether anybody is aggrieved or not is immaterial. Whether anybody has suffered any loss or not is immaterial. In short, what is the principle, friends? Your work should be perfect in all respects from any angle. Any angle, if you see, your work is perfect. And if at all there are any lacunae, your working note, your qualification, something should be there. For example, now typically these IRPs, means in that IPs, they ask you to certify the financial statements. And now usually these companies are sick companies. Their records are not available. Now SA 700 or SA 705, they give a clear direction as to how you should qualify a report. We are lacking courage to qualify a report. See, the Cooperative Credit Society's audit was there. There the auditor had done the audit very nicely. And in four-page annexure, he had found out the adverse remarks in the financial accounts. But despite so much of good work, unfortunately, what we write in our final report is subject to these things which are stated in the annexure, it gives true and fair view, which is very wrong, which is objected to by the institute. Why? A simple reason. There, in one particular case, the profit and loss account showed a profit of 1 crore rupees. Whereas when the annexure, if you give effect to each and every point that the auditor himself has pointed out, there would have been a loss of 15 crore rupees. So he said the auditor himself is aware that actually there is a loss of 15 crore rupees. How you can say that 1 crore rupees profit is true and fair subject to this? There is no meaning. It is meaningless to say that it is true and fair. So subject to has its limitations. Therefore, when you have to use the subject to terminology or expression, when you have to qualify, in what manner to qualify, what will be the emphasis of matter, And also when you have to give the disclaimer. For example, in IPs, in NCLT, for example, if the record is not available, you should have courage to say that the record is not available and therefore we are unable to express the opinion. Because in your report, you are stating that we have obtained the information and explanation which to the best of my knowledge was necessary for the audit. So it is your duty to obtain, it is your duty to ask. Many of our articles and many of your staff, they say that client did not tell us. Why they did not tell you? Because you never asked. So therefore, you should develop a habit of asking and inquiring. And you should inculcate that habit among your staff. They should ask for what they will ask, because they should know what is required. For that, the training is required. So you should prepare a checklist which is readily available given by the institute. So from that checklist, you have to carry out all the assignments, not necessarily only audit, but even your advisory function, what information you should ask for, what the facts you should seek, everything is to be properly documented, and you should be able to show that these are the facts which are communicated to me. I have understood these facts, and on the basis of which I am giving this certificate or opinion. Now, another set of cases which I have to tell you, just as I told you about that NBFC and NFRA matter. Another very common case that came about 8 to 10 such cases. Very large corporates of say turnover of 4,000, 5,000 crore rupees, and their stocks are also 400 crore rupees, turnover 4,000 crore rupees. Their head office is somewhere in Ahmedabad. Now, these corporates approach a small-time chartered accountant somewhere in Mumbai, and they insist that he should certify the stocks. Now, they say that it is urgently required. That is why they have approached him. So urgency, remember, as far as possible, avoid urgent work. If it is urgent, you are bound to commit some error or the other. So avoid urgent work. Client creates a pressure on you because of this, and you succumb to that pressure. Here in this case, that small chartered accountant was tempted that he would receive a fee of 30,000-40,000 rupees by just 2-3 days work, and he has to sign. What impression he was having was such a large public listed company with all good auditors there, with all good professionals there. So there's everything would be normally good and all right. And I'm signing this. So he signed, he received the fees perhaps, but not a single working paper. The professional skepticism is that why these people are approaching me when they have an army of senior chartered accountants with them. Why a corporate from Ahmedabad is approaching me sitting here in Borivali of Mumbai? See, I am a director of a small scheduled cooperative bank. Whenever large borrower comes, the first question we ask ourselves as to why he is coming to us. We are small banker. Do they feel that we will not do the project appraisal properly, the loan appraisal, or are they taking us for granted? What is there in their mind, and why are they approaching us? Or they might later on try to dictate over the bank. So remember that don't succumb to such pressures. But why? So this is again the importance of working papers. So working papers, friends, these small chartered accountant did not maintain anything. They might not have even taken the appointment letter. So working paper means what was the stock, what was the nature of the stock, what was the valuation, how the valuation was done, where was the location, how many persons you sent them to verify that, where are your queries, where are your working sheets, where is your visit report. All these are working papers. So nothing was there because they are just thokam thok karke they are certified. So if this is the situation, the importance of working paper can only explain to you that whether you have done the work or not done the work properly. So work should not only be done, but it should be seen that it is done. Now I will tell you a very interesting case again, which will be explaining to you the difference between what is gross negligence and what is lack of due diligence. Friends, there was a company with a 600 crore turnover. The head office was in Mumbai, and they had some mines in the northeast part of the country. There was a term loan from a PSU bank. That unit became an NPA. Now, whenever such unit becomes an NPA, it is a standard practice in the banking sector, especially nationalized banks and large banks, private banks, that they will first victim they will catch hold of the auditor. Earlier there could have been a collusion between the management of the company and the bank manager. But when it comes to NPA, immediately to protect their own people, they file such complaints. They say that we relied on this auditor and we financed the company. Now, these auditors, they came to me and they had maintained excellent working papers, which was a learning for me also. So I complimented them that you have done so much of good work in working papers. So we sent all the working papers. They came to me after about 18 months, and they said that this basically they have asked for only two details. One is whether you had written to the banker for independent confirmation of the transactions or for the balances. They said we did not write, but we have obtained all the photocopies of all the bank statements with us as our working papers. So I said, very good. So we will send that. About the second question was whether you had written for the confirmation from debtors and creditors. There they said, no, we had not written. Now, friends, year after year, for last 25, 30 years in Karo, Mao Karo, everywhere we simply write one remark. All the balances of debtors, creditors, lenders, depositors, etc. are subject to confirmation. But in the first place, we never even show that we had attempted to get the confirmations. Because it is third-party evidence is a direct mandatory standard on audit. Now, I understand that there are practical difficulties in getting, but if there is some material amount which is not confirmed by any party, then you have to qualify the report. We are very much lax in all these things. And therefore, in this particular case, finally it was revealed that all the documents created by the company were fabricated documents, including bank statements. This is the level of integrity and honesty in the business world. And therefore, writing independently is of utmost importance, especially in large organizations. You have to do it. Because now, see, this is the difference between gross negligence and lack of due diligence. See, in so far as they had obtained all the bank statements, you cannot say that they are negligent. They had done the job. They had seen the reconciliation, they had obtained the bank statement, so they are not grossly negligent. But lack of due diligence is there because they did not verify it independently. Had they done it, you can imagine and you will agree that a big scam would have been exposed much earlier. So good faith, friends, is dangerous in this, like this. Now I'll tell you another case which was reported in the press in Mumbai, that 3 large reputed hospitals had formed a trust, a medical trust, to help the poor and needy patients. There was the internal auditors were very nice people. They are quite closely known to me. They are nice people. So last 20 years, they are doing the internal audit, right from the inception of the trust. The statutory auditor also was a respectable chartered accountant who was also doing the work for last 20 years since the inception. And they were getting along well. Management was very happy with them. Now there was a sub-staff in that hospital, a peon, whose son was doing BCom. So these chartered accountants, who were very nice people, kind-hearted people, they taught that son as to how to maintain accounts and basic principles of accounting and practical knowledge they gave. That boy had another friend, similarly economically backward class. So both of them were taken up in the employment of that trust. See, trust had only 4 to 5 employees, in which one was this clerk and one was this accountant. It was all going on very smoothly, but Last 8 to 10 years, these two boys started committing fraud, and the total fraud they had committed was to the tune of 6 crore rupees. They had simply created some new entities of their own because now they were very conversant with the accounts. So they had created the entities and they had siphoned out the funds by taking advantage of the very busy schedule of the governing body members who were all senior doctors. So professional skepticism is that every year original bank statements were as far as possible not produced for the audit. Or especially in February and March, there was no original statement. Every time there was only photocopies. The question should arise as to why every year or why every year about 3 or 4 months the bank statements are original or not there. This question was never raised. And remember, friends, another lacuna, just as I told you that we are lacking in working papers and we are lacking in verifying the secretarial records, another lacuna in our working is that original fixed deposit or investment documents we never verify. In a small trust, if there are fixed deposits, don't have blind trust on the employees or the trustees. Verify. And there are 3 or 4 such trusts. One is a Goshala in Gujarat state. Many where the staff takes advantage of the fact that the trustees are very highly placed people and they are very busy people. So what? There was a manager in his hospital, charitable hospital, and when the doctor was going always to the operation theater, that lady manager, she used to hurriedly go, sir, please sign this check and this fixed deposit because we need to encash it because we are buying that machine and all. And in a hurry and relying on her, the doctors used to put their signatures. What she used to do was, she was encashing the fixed deposit and transferring the exact amount pay to her own account. And she used to mask that contra entry and furnish the bank statements for the auditors. Now, the auditor never ever verified or asked for the original fixed deposit receipts. Sometimes they say that it has been kept in the bank's locker. If it is so, verify it from the banker that yes, whether they are holding such deposit receipts. That is called third-party evidence, and this is due diligence. So due diligence, that is a part of our duty, and if you do it, probably you can do more effective service. So this habit we should inculcate, that third-party evidence, especially with the banker, debtors, creditors, we should always try to obtain third-party evidence. Another observation of mine is that our chartered accountants, they are very much lacking in verifying certain things which the client tells you. As I tell you, it is trust but verify. So for example, they are doing all the certification based purely on the ledger accounts. For example, capitalization, if there is an office purchased or factory constructed or any vehicle taken, they don't go beyond the financial accounts. So they don't see the agreement of purchase. They don't see what is the capitalization, stamp duty, registration, whether it is properly done, whether the interest under section A, under accounting standard 16, whether it has been properly capitalized, whether the asset is really put to use, whether the machinery is erected, commissioned, whether it has been put to use or production has started. Expert certificates are required for this, or government certificates are required for the completion of the office, completion of the construction. Everything they are not bothered even to ask about it. They just go by the ledger account and even claim depreciation and certify the balance sheet. Later on, sometimes additional cost is appearing, the transactions take place. That means initial capitalization was incorrect. So all these things, so you have to see the original document, you have to see the original deed, purchase, sale, everything, capitalization, that kind of thing. So they don't go beyond the ledger account. Unfortunate part is that many chartered accountants don't go and they don't see anything beyond the financial accounts. They are least bothered about the quantitative details. Quantitative details is another area where there are many fraud. And remember now, friends, nowadays there are many management sponsored frauds. The management itself is involved in the frauds. And the institute in their standards on accounting has recognized this fact. They have said that it is difficult to detect these frauds. But at the same time, that is not a shelter for the chartered accountant. They have to perform their duty then they have to do utmost to verify the correctness of the accounts in terms of likely frauds. So this is another area that quantitative details, stock statements, there we are very much lacking. And these are all causing gross negligence or lack of, and these are causing frauds. So if the chartered accountants become more diligent or vigilant, probably the financial discipline in the economy will be restored, because audit function is taken lightly by everyone, by the business community and by the auditors. This financial debacle of the country perhaps is occurring because they are not very particular and serious about it. Now I'll tell you the broad procedure of disciplinary mechanism, and then I will deal with the important clauses in the schedule. Procedurally, as I told you, that it starts with the complaint or it starts with the information. Information and complaint I have already explained to you. If the complaint is against a firm, now complaint is in a prescribed form with a fee of 2,500 rupees. If the complaint is against a firm, the disciplinary director first asks the firm as to who is the person answerable on this. Who is the person accountable for this particular complaint? Now, apart from the signing director, there could be some other chartered accountants also who are answerable. So once those are identified, the proceedings are against them. It is not against the firm, as I told you earlier. So now, if the complaint is received, the director discipline simply forwards it to the respondent. The respondent is expected to write this written statement or explanation within 21 days. But we chartered accountants are not proactive. Very great defect about chartered accountants is, apart from communication skills, is we are not proactive. We are reactive. So we always wake up at the last moment, at the 11th hour, and then we start running and we seek extension. So here also, fortunately for such guys, there is a provision for extension of time, which was earlier 30 days extension was permissible. Now they are curtailing it to 21 days. Now in your written statement, your approach should be that of any objective explanation. Whatever are the allegations, you explain objectively. You don't try to counter-attack the complainant. You may mention that the complainant is of bad character, he's a criminal, he's behind bars, he had done frauds in the public domain also, he's known to be a fraudulent person. All that you may mention. But that by itself is not your defense. Your defense is that whatever is the allegation, objectively you say how you have worked. So this is first and foremost thing. You send your written statement. That written statement is sent to the complainant. Now, when the lawyers are there, they have a wrong notion about this. They always feel that everything is again finally coming before the court. So they say that we should not open all our cards at this stage, which is a wrong thinking. Because here you don't get another opportunity to open your cards. If you have to nip that thing in the bud, then you don't get opportunity. Otherwise you get, but that time the damage is already done. So remember that whatever are your merits, you have to place it and record immediately at the first stage itself. Now, once you place on record your written statement and that it is sent to the complainant has to send a rejoinder. That means what is his reaction to your written statement. So once it is 3 documents are received, then the processing or the scrutiny of the complainant starts. A complaint starts. So the complaint starts. So in the scrutiny, they might identify some additional information, and that additional information they may seek from complainant or the respondent, as the case may be. What are the normal things of additional information? First is normally, if any document is in a vernacular language or a regional language, they ask the English translation. Or if something is based on the local laws like state acts, State Cooperative Society Act, State Public Trust Act, then the provisions of that. But very common thing they ask is your working papers. Where are your working papers? How you have arrived at a particular conclusion that it is true and fair? How you have certified something as true? All this, the working papers is the essence of our practice. Along with this, I have shared the PPT of working paper management, and I am sure that the members will get benefit from that. And I am actually in my discussion also, I am making a reference to the working papers again and again. Work should not only be done, but it should be seen that it is done, is the maxim, is the mantra of our profession. So they ask this information. So again, now to recapitulate, the complaint, written statement of the respondent, rejoinder, and additional information. Once this is obtained by the director discipline, then they arrive at what is called as prima facie opinion. Prima facie opinion means, suppose there are 7 allegations. So the director discipline may say that in 5 you are not prima facie guilty, but only in 2 you are prima facie guilty. They have to present this prima facie opinion before the board of discipline or the disciplinary committee. Disciplinary committee or board may or may not agree or only partly agree with the opinion of the director. For example, if director feels that he is not guilty at all, prima facie, board may say, no, he's prima facie guilty, we should examine. Or sometimes they say out of 7, the director says that in 5 he is not prima facie guilty, but the board may feel that no, only in 4 he is not prima facie guilty, in 3 he is prima facie guilty. Likewise, once you are prima facie guilty on even on 1 count, then the proceeding starts for hearing. So the proceedings against you are basically deemed to have commenced when you are held prima facie guilty. So in your empanelment form or everywhere, till that time you are nothing, you are not prima facie guilty, you don't have to say anything. But if you are hence prima facie guilty, then you have to say, yes, there are proceedings in progress against you. This is the point of time. Now, you are given opportunity to react on the prima facie opinion, both complainant and the respondent. Thereafter, there is a hearing. In the hearing, you can be represented by counsel. The counsel from both the sides. After the hearing, it is a fact-finding process. After the hearing, the committee or the board, as the case may be, they arrive at the final conclusion whether you are guilty or not. So that is called their finding or their report. Once that is issued and you are held guilty finally also, then you are given one more opportunity as to what punishment should be awarded. So there you have to go alone. There you cannot take with you any counsel or any other person with you. And you have to cry there and plead that it should be mild and all. So that accordingly they will award the punishment. So the punishment is they pass an order of punishment. So now there are 3 documents which are coming from the council side, the institute side. What are those? Prima facie opinion, then the final report or the finding, and the third is the order of the punishment. That order of the punishment is appealable to the appellate authority. So appellate authority, within 90 days after you receive the order, you have to appeal, and appellate authority sits only at Delhi. Whereas all the other hearings take place in the various different regions, depending on where the respondent is situated. So this is the procedure. Now, once the appellate authority, beyond that, there is no appeal, no further relief or remedy prescribed under this act, then you may have to invoke writ jurisdiction of the High Court under Article 226 of the Constitution. But unlike in the Income Tax Act, where tribunal, High Court, Supreme Court, everything is specified in the act itself, here appellate authority is treated as the final thing. So now this procedure and this part I have completed. So thereafter now we go to the punishments. There are punishments are of 3 types. In the first schedule, which is, as I told you, that is of lesser gravity, punishments are of three types. What are the punishments? First is reprimand. Reprimand means if the default is of a very technical nature, and not very serious, then usually they reprimand. So what is reprimand? Reprimand is basically they tell you that don't do such things again. It's a lot of a warning or a stricture. Secondly, the other punishment is, there could be a combination of all these three. Next punishment is fine up to rupees. Earlier it was up to rupees 1 lakh, but now it is up to 2 lakhs. They have increased it. The third is suspension of membership for a period not exceeding 3 months was there earlier. Now it is 6 months. So 6 months suspension maximum for first schedule, fine maximum 2 lakhs. But if there is a repetitive guilt within 5 years from another partner of the same firm, then the fine may be more, that can be doubled, and also firm can be punished. So this is now the new thing which is coming. So that is, I have updated that particular slide. For second schedule, again similar. Firstly, the first punishment is reprimand. Although very rarely in the second schedule you can leave under reprimand, because second schedule is supposed to be more serious. Reprimand, but if you are very lucky and if that nature of offense is really too hyper technical, then perhaps you can escape on reprimand. Otherwise, fine, which was up till now, it was maximum 5 lakhs, now it is raised to 10 lakhs. And a suspension can be any length of time, even permanently. For example, if you are involved in the fraud or in that big corporations audit, Satyam, the auditors were debarred permanently. The individual auditors, not the firm, remember, they're debarred permanently. Or that bomb blast case, where a chartered accountant was involved in the bomb blast of Bombay of 1993, where he was debarred permanently. So permanent cancel suspension is also there. Now we will, and again, same thing, repetitive. Within 5 years, another member is found guilty on this, then the firm also can be punished, and fine and suspension also is double.
Sir, please continue.
Is it a warning bell for me?
No, no, sir, nothing as such.
Yeah. No.
Not at all, sir.
Now, indirect punishments are there, which are more severe. See, once you are held guilty, then you are deprived of CAG audits and you are deprived of bank audits. People wonder as to why this type of punishment, but our institute says that this is not the rule of the institute. This is the prerogative of the respective authorities. And the RBI says that with a tainted background is there, then there are so many other aspirants, so many other firms. So why should we allot the audit to the firm with a partner with tainted background? Therefore, you are sort of permanently debarred from bank audits. This is important. This is a great loss to the revenue of your, or loss of revenue to you, which is an indirect punishment which is very severe. So this is one. Second indirect punishment is that your eligibility, now for example, if you are held guilty and suppose you are suspended for 2 months, 3 months, you can get yourself restored. The membership is restored after 3 months period by applying. And there your seniority becomes 0. That means you are not empaneled anywhere. You are right from scratch one, you are starting. This is your first day of practice. You cannot engage articles, nothing. This is another very harsh type of indirect punishment. And thirdly, it is a stigma. It is a disrepute to you yourself. It is because ultimately your name is published in the official gazette and the thing keeps on pinching you. It bites you. Your family members, your friends, they perceive as if you are a very guilty person. So remember, these three are more severe punishments rather than the actual punishment. Who complains? As I told you, anybody can complain. Staff, article, client, regulator, brother, sister, partner, anyone can, even your spouse can complain. So this is very wide, and there are blackmailers also. So anybody can complain. There are other vulnerabilities, very unfortunate, friends. Complainants sometimes directly approach the police, and the police arrest the chartered accountant unnecessarily. It is becoming very common. We have to do something collectively against this. For anything, even if it is a civil matter, still the police intervenes just to create pressure. There was one case where a lady who had some friction with the chartered accountant, that chartered accountant had helped her a lot. But forgetting all that, because he refused to do certain type of work for her, which was unrealistic and irrational, was signing a wrong balance sheet she was expecting. She got wild, and what she did, that when the chartered accountant was outside his cabin, she sent very dirty and obscene messages from his mobile to herself. And she showed it to the police, and the police arrested that chartered accountant, and he was behind bars, and now he's on bail. Remember, you can imagine this. And also, she sent it to the institute. This is bringing disrepute to the profession. Now, technology can create havoc. Technology, you can even create a straight proof that from your mobile an SMS has been sent to Mr. XYZ. By not handling your mobile at all, this technology is easily possible now, they say. So if this is the state of affairs, how much cautious you need to be. So remember that police is there. Secondly, they go to the press. And in the press also, all the defamation is done. Thirdly, the consumer forum. Suppose you have given wrong advice, just as there are medical legal cases in the medical association and again consumer forum. Same way, they go against the chartered accountants in the consumer forum. So these are the things. That is why peer review is actually meant as a preventive measure. Peer review, you need not have a formal peer review, but let there be a peer review among ourselves. Let our other colleague or the partner in the same firm examine our work, because our mind is not fresh when you are under pressure. Therefore, we cannot see the things independently and objectively. So let somebody see. Or fortunately, we have some good friends community there in the profession. So you can have internal peer review among the friends. But it is essential, friends, very essential nowadays, because the times are changing. Then I'll deal with certain important clauses of the schedule. Then I'll also deal with exact difference at the fine end. I'll deal with the exact difference between purely legalistic approach and the ethical approach. There are many decisions, many cases which I have to skip because of the paucity of time, but I will deal with maximum possible number of cases which I have so far handled. That will give you a glimpse, that will give you a clear idea as to how much cautious you should be. There are 4 parts of first schedule. First part applies to the members in practice. Now there the important clauses are like solicitation of work, advertising, publicity. These are the normal clauses of this first schedule applicable to the. Now their main clauses are clause 8 and 9, which are very common. Clause 8 is our most familiar clause, previous communicating with the previous auditor. Now it says that you have to communicate with the previous auditor in writing before accepting the audit. Unfortunately, all our people wake up, because once the client comes, they grab the work, they start auditing. And when the time of signing comes, that time they realize that they have not written to the previous auditor. And they try to do backdated things, they try to do so many other unscrupulous things. So you have to write before accepting the audit. Secondly, another important factor is that the communication should necessarily be in writing, and the previous auditor does not necessarily mean the previous year's auditor, but at any person who held this position last. For example, 4 years ago, there was a tax audit. In between 3 years, there was no tax audit because there was no turnover. Now again, there is a tax audit. So you have to locate that person and you have to write to them And that information you have to ask from the client as to who was there. You may have the auditor's certificate also or the auditor's report. Moreover, earlier only prescribed or preferred mode was a registered post. Now you can write on the email also, but that email should be sent on the ID which is there registered in the institute's portal. If you communicate on that, then that communication is treated as a compliance. Then secondly, along with this, there are two other things. There is a guideline which states that if there are any undisputed audit fees unpaid of that the particular previous auditor, then if you accept that work, it is a misconduct. Remember, the no objection certificate, this expression is nowhere used. You don't have to ask for NOC. You have to wait for reasonable time. But communication is important. That communication you cannot delegate to others. You cannot say that I have given my letter to the directors or the trustees who are going to ultimately obtain that. Another flaw which we commit is that when the previous auditor has resigned, sometimes he writes that he has no objection even if any other auditor is appointed. Sometimes they write like this. This is not a defense for you. It is still your duty to write to him. It is very, very important. Otherwise, they say he has already given NOC. No, it is not an NOC. So, because now ROC also inquires as to why you resigned. So now when that NOCLAR came, NOCLAR is what? Non-compliance with laws and regulations. So if you come across any non-compliance with any other law in the course of your audit, for example, labor laws, trademarks act, FEMA, then it is your duty to take cognizance of that. And that NOCLAR, when NOCLAR was introduced, many big firms also gave up a lot of audits because that clearly shows that there are non-compliances everywhere in the large corporates also. So this is the reality of life and you have to be very cautious. Undisputed audit fees have been defined. That if the undisputed means if there are any audit fee, and what is audit fee? Audit fee means which is applicable for the audit done under any statute, like tax audit or GST audit, under any cooperative societies audit, any under statute if the audit is done, that is protected. But if it is done just voluntarily audit, that is not, that audit fee is not protected. So undisputed audit fee means the one which is appearing in the balance sheet as outstanding, and that balance sheet is signed by the client. This is called deemed to be undisputed audit fee. So it is likely that now chartered accountants will say, what about cash method of accounting and all? Now these are all nonsense questions because anything you can always verify whether it has been paid or not. And otherwise you have to write to that auditor. So along with your request for so-called NOC, you have to ask whether you are aware of any professional or other reason as to why we should not accept this audit. This is the wording which is prescribed or rather which is suggested by the institute. There you have to add, please also let us know whether any of your undisputed audit fees has remained unpaid. Because directors or the management will show you that, see, we have paid the check. But it is likely that the previous auditor has adjusted it against other fees like consultancy fees. And still he can say that audit fee is still pending. So these are the dangers, these are the risks in this. Therefore, you please write to the previous auditor like this, whether any of your undisputed audit fee is pending. Now, one more thing they have added, that if you ask whether there is any other reason or whether there was any other tips or whether it is experience about the audit, then the previous auditor can and perhaps he has to share his experiences. Suppose he is aware of something very fishy and some serious irregularities in the accounts, then it is his duty to caution the incoming auditor. Remember, earlier this was not there. Earlier the approach was that I should not disclose the information of the client, but now it is recommended and it is permitted. So this is a change in the perception. This is a change in the attitude. This is a change in the approach. So because now we have to protect the chartered accountants community as a whole. So this is basically for our benefit. It is for our for protecting our interests. This is not a burden on us. Unfortunately, and people take all this as a burden, which is not a burden. It is to safeguard your interests. Next is clause 9 of this schedule is to verify whether your own appointment is validly done. And I have discussed it already that you have to see whether all the company law procedure has been followed. Then the next one in this clause is that clause 11, which is engaging in other business or profession with permission of the institute is required. Now here the most dangerous concept in the high obsession of the chartered accountant is HUF. Remember, HUF as such hardly ever exists up now. The genuine HUF is not there. It is just a tax entity now in today's times. If there is a very, very genuine HUF and if you apply to the institute may grant permission, you have to prove that there is no one else to look after that business. In reality, it is very rare today. But then if you are permitted, if you get the permission, then you are reduced to a part-time practitioner. Once you are in part-time practice, even a teaching job, if your teaching hours are more than 25 in 1 week, then it is, and if the permission is granted, then you are basically a part-time practitioner. And what is a part-time COP? That means you cannot do the attest function and you cannot train the articles. So these are the restrictions on the part-time COP holder. Now this is, so you have to obtain the permission. Only now share market transactions, including F&O, are permitted, but only for yourself. Not, you cannot render that service of PMS or anything for others. So it cannot be a business for you to do it for others, but it is permitted now only for yourself. So this is also a fact to be noted. Many chartered accountants create private limited companies only with their spouses. But now they say signing of checks, signing of contracts, signing of any document, even signing of financial statements is now treated, because what is permitted is that you can only remain a director simpliciter, not an active or executive director. Director simpliciter means he can sit in the board, he can be even a promoter and subscriber to the memorandum, but not participating in the active management of the business. So this is again very important. And whenever there are only two persons, two spouses are simply running a private limited company, I would caution them that they should induct a third director to ensure compliances, because even signing the statutory things is also treated as if you are actively engaged in the business. So remember this. Then at this active business, there are many cases on this, but now I have to skip it. I'll go to the next part of the schedule, part 2, which is applicable only to the employees. Now in the employment, suppose you share your emoluments with others, non-CAs, then it is a misconduct. These are not very common cases. So also he accepts any kickback or bribe. Suppose there is a CFO and he gives assignments to the other professionals or other contractors, and if he takes any bribe or any kickback, then that is also obviously a misconduct. Then part 3 is not very common, means not treating, knowing, calling yourself as a fellow when you are not a fellow, or does not update the information called for on the institute sites, and also these are not that important, means not very commonly happening. And other misconduct is important. Other misconduct is basically bringing disrepute to the profession. And there are two clauses in this. One is that if you are held guilty under any other law other than Chartered Accountants Act, then if the punishment prescribed for that guilt or crime is of imprisonment of less than 6 months, then it falls in Schedule 1. That means lesser gravity. So suppose you are held guilty under some Trademarks Act or under some even say traffic rules, any such thing. And if the punishment is there, or even Information Technology Act, then if the punishment is imprisonment of less than 6 months, then it is falling in Schedule 1. But ultimately it means what? It means that it is a disrepute to the profession. And second is clearly bringing disrepute to the profession. I'll be sharing a case which will bring out the difference between this part. Now we go to the second schedule. Second schedule, again, there are many clauses, but clause 4 is important and relevant. It says that if you express opinion on the financial statements of a relative, where you have substantial interest or your relative has a substantial interest or your partner has a substantial interest or your partner's relative has a substantial interest, and relative is defined, which is more or less adopted from the Companies Act. So if that is there, then you are guilty. Earlier, it was permitted before 2006 Act. It was permitted to make a disclosure in the audit report, but now it is not permitted. Therefore, this is very important. And because sometimes when I go for physical lecture out in the upcountry side, many people ask me, husband and wife, whether they can sign each other's tax audit. So this is obviously not permitted. You cannot sign the balance sheet of your brother or a close relative. So this is 5 onwards, clause 5 onwards are in the first schedule. I did not mention about the publicity advertising. There are separate guidelines, advertising and also soliciting. You can solicit the work from another chartered accountant. Now it is permitted. So also sharing fees with our other non-members. Now multidisciplinary firms are now permitted, but they cannot do the attest function unless the majority of the partners are chartered accountants. So otherwise, you can have a partnership or an LLP with company secretaries, CMAs, lawyers. All this is permitted, provided the other institutes give a reciprocal permission to their members. So this is another thing that you have to keep in mind. So otherwise, multidisciplinary thing, even a corporate form of practice is also there is a separate guideline. What are the management services that you can render? But this is again subject to section 144 of the Companies Act. So many things you have to bear in mind, friends. Indebtedness is a guideline. Where if you are indebted to an organization, then you cannot do the audit. All these things are there. But this clause 4 is conflict of interest. And 5, 6, 7, 8, 9, they go together usually. Because there is a negligence. There is a material misstatement. With a material misstatement, so there is amounts to gross negligence or lack of due diligence. Or there are conditions where the clause 8 and clause 9, for example, which are very self-explanatory, that the information and explanation which was necessary you did not obtain, or you are signing it without verification. All these are ultimately resulting into gross negligence. So 5, 6, 7, 8, 9 go parallel usually. Clause 11, clause 10 is keeping the client's money in a separate account. That means you cannot mix up client's money unless you show that they are held only for temporary purpose, immediately to be disbursed, immediately to be expensed out. For example, the client gives you money for paying his tax and immediately you pay it off. But suppose that money remains with you and you use up for your personal mix up in your other funds, then client has a right to complain that he has used my funds. For example, if a client gives you 10 lakhs rupees to pay his advance tax, since he is going outside, so he said, better you keep it, and 1 month in advance he gives. Now, not a single rupee out of the 10 lakh you should use up anywhere. That means your balance should continuously, bank balance should continuously remain more than 10 lakhs. This is very serious, very important clause. This is a misconduct. Of course, the client will not complain so long as you pay his advance tax in time. That's a different story, but it is a misconduct. So this is that holding in a separate bank account. Second schedule, part 2, first clause is very important. Contravenes any of the provisions of the act or the guidelines or the regulations or all these things. So breaking or contravening any guideline is also a misconduct. Similarly, being an employee of the company, firm, or any other firm, then if you discloses the confidential information. So confidential information, if you divulge the secrets of the client or the confidential information, this is a misconduct under Schedule 2. And includes any document or submitting to the institute which is false or which is incorrect, and the defalcates the money. There are chartered accountants who have been held guilty for defalcation or misappropriation. So these type of cases are also there in the disciplinary. And next is, as I told you, the part 3 of it is that if the imprisonment, as I told you, if you are held guilty under some other act and the imprisonment is more than 6 months, then it is under Schedule 2. cooperative societies and all this is there, then advertising guidelines and all there. Now, finally, I will tell you one important case of which brings out a distinction between pure legalistic approach and ethics. You cannot say that we have complied with all laws, that means you have followed ethics. Ethics is a thin line of distinction is there. There was a chartered accountant who issued a check to a cousin, close cousin, direct cousin. But he knew that that cousin was not of a good character. But to help him, because that cousin said that if you give a check to me, I will raise funds for my project from outsiders. So give me 10%, which is 50 lakhs. My project is of 5 crores. So that balance I will raise from the market. He gave in good faith out of love and affection towards the cousin. He gave it. That cousin went from pillar to post and nobody obliged him. Nobody gave, because his reputation was not good in the market also. So nobody gave him any money. So out of frustration, this cousin, who was not of a good character, he deposited that check, got it bounced, and filed a 138 negotiable instrument like case against the cousin, who is a chartered accountant. This is the illustration where Schedule 2 would come into play, because if he is held guilty under Negotiable Instruments Act, and the imprisonment is less than 6 months or more than 6 months, depending on that, it will fall in Schedule 1 or Schedule 2. So this is a good example of the other laws. So somehow he managed with the criminal complaint before the magistrate, and this poor fellow chartered accountant was convicted. 6 months imprisonment. The matter went to the institute. He has appealed to the High Court about this. Now it is likely that, considering all the facts and everything, High Court may acquit him also. But remember that if suppose you have given a wrong advice or done something wrong, and there is a penalty for, say, under section concealment of the Income Tax Act, suppose you get the penalty deleted by many methods. There could be some technical ground, there could be some amnesty scheme or any such thing you do, because of this penalty is deleted. But the fact remains that you had not given the correct advice. Then you cannot undo what has been done. So you cannot say that actually penalty was not levied because it was dropped. This cannot be a defense, because you cannot undo what is done. So if it is proved that your advice was incorrect, then your misconduct still continues. So what happens in the law, other legal proceedings, does not have a direct bearing on your ethical case. Remember this. And in this case also, even if the High Court acquits him, there is a view that there are two unethical things this person had done. What were they? He had issued a check of 50 lakhs when there was no adequate balance in his account, perhaps. It is very likely that there was not that much of balance. Secondly, he had issued the check with the full knowledge that that check would never be deposited, and that some other person would be misled by the check issued by the chartered accountant. Because see, somebody will feel that chartered accountant has issued a check of 50 lakhs. So let me take a risk of 10 lakhs. That means some person will be misled because of that. So friends, this is also an unethical part. So what happens in the law, what is purely legalistic, does not necessarily mean that it is ethical. So these are the things which I wanted to share. There are many things I can speak for hours together on this, but there are constraints of time, and following the time discipline is also a part of ethics. And I compliment this study, this particular organization, that they commenced the session right on dot at 4 o'clock. We are all together. So we deserve compliments. I thank all the organization, especially three Agarwals and Madam Nidhimaji and all the people who have taken efforts. Because usually those who organize, they sometimes are not remaining present throughout the session. But here I found something different. So I thank all of them. I thank all of you, the organizer. I thank the audience also who have participated from all parts of the country. So, and I wish now that New Year is coming, so let us resolve that we will learn something out of this, and even 5% improvement is there in our day-to-day practice, perhaps the efforts taken by the organizers in organizing this particular thing will be rewarded or be fruitful. So I wish all of you a very, very happy and bright new year 2023. Thank you very much and Jai Hind.
Thank you, sir. Shyam, is there any question from the participant? They can raise their hand.
So as of now, on the chat box, there is no questions, but if anyone wants to ask any questions to our speaker, I would request you to unmute yourself or you can raise your hand. I'll unmute you. If anyone has any questions.
मला गरम पाणी दे रे.
There was a question, Gaurav Agrawal, to everyone. During the bank concurrent audit, if any major point is noticed, bank manager denies to sign the report. If such point is not removed from the such report, and if we go beyond, we get removed from the bank audit panel only. Oh, this is the statement information.
That means they pressurize you to sign
Right.
something which is not correct. You are correct
Which is
and you
not
succumb to that pressure. So
That
that is what I have understood correctly,
Yes.
that you have to put some reservations or qualifications, but they are threatening that if you write that, then they will remove you. Is that the thing?
right, sir.
Correct, no?
Most of the time that happens.
Yes. That is why I mentioned that if you have to have the courage to say, no, I understand that you may sacrifice or you may lose your fees, but the community as such entirely should take that stand. It should not so happen that you are refusing, so other person is doing it. If you have a valid reason for not doing it, and then you should escalate it. Suppose you have signed it, then you should escalate that thing to the higher management, or you can even escalate it to the institute or escalate it to the finance ministry if it is that serious. We are not active on that. We just accept, and with the under that threat, we just sign, we succumb to that pressure. But if you are collectively, our strength is there, then we know that if we refuse, nobody else would also dare to sign it. So yes, it's a change of attitude that is required. It is difficult, I understand, because ultimately our bread and butter depends on this. That is why this independence is only a myth, because we cannot be independent. So that is foundation of the profession itself is very weak, because that client who is going to pay us fees, you cannot be very independent on this. That is why I agree that it has practical difficulty, but depending on the situation, you should have courage to say no and escalate that matter to the top management. And that is all that just now I can say.
Good evening, sir. Hello.
Yes.
Sir, I am Vasant Parekh.
Yes. Good evening.
Sir, I am saying these recordings every fortnightly we should go through, because what we listen today after 72 hours may go out of mind. So it's so superb, so superb, because I had heard you at the Corona time also, when that husband wife episode you had said, can never post anyone. It recollected me. Thank you very much for the wonderful session, sir.
Thank you. But you should always bear all these things in mind,
Yes,
and there should
yes,
be a constant update.
sir,
Thank you.
sir, any opportunity to listen to you, I don't miss.
Thanks for the compliments. Yes, thank you.
Yes,
The
it's my
credit goes
pleasure
to the
and honor.
organizers.
Organizers, sir, know me very well.
Thank you, Parekh ji. Thank you, Bas.
Sir,
Sir, there is
recently
one
we have
question.
seen, recently, sir, we have seen so many chartered accountants are joining the networking business group. So they had the meeting in the closed door meeting, whether it is permissible, sir.
No, there is an express bar on this now. Institute
Right.
has issued a circular that it should not be done. The reality today is that many of the chartered accountants are shying away from the attest function because of all these things, many restrictions, and then they say that they take pride in not doing the attest, but they say they become only consultants, and therefore, unfortunately, the core function of the audit is rather sidelined, and that is the tragedy of our profession. But as to answer your question, the BNI and other those things are not permitted. Expressly, they have debarred.
Okay. So there's a question from Mr. Lalit. What are the legal options for non-payment of audit fees by the client?
No, otherwise a civil suit. But the other option is that you can hold that audit, or rather, no other auditor can enter into field unless your audit fees are paid. So firstly, it is a civil matter, but institute does not have power to make the client to pay your fees. They can only say that because the other auditor who is appointed, you can threaten him, or you can point out to him politely that this is the state of affairs, that this is the notification. If you accept the audit, it will be a misconduct on your part. And then you can say mildly threaten him that if at all he does it, then he might proceed, you might proceed against him in the disciplinary mechanism. So this is the protection given to you.
Absolutely.
Otherwise, you proceed in the civil court for the recovery of your fees. But institute does not have power to do that.
Sir, in this case, sir, I'm Lalit CA Mahavar, sir, Lalit Kumar Mahavar. In this case, sir, appointment letter is required for every year
Appointment
for,
letter
to
is
file the suit actually. It is compulsory.
appointment letter. No, you should have no, under company that you now you have to upload no to the ROC
No, no,
site.
not this company, sir. Non-company case.
Yes, you must have appointment letter for any audit assignment, and you should also give engagement letter, because now standards on audit 210, if you read, this is mandatory now. So there should be, and it is in your own interest. No, I'll tell you a very funny story that there were 4 partners in a firm, not CA, that client, and there was a dispute. So 2 of the partners appointed one firm as tax auditor, and 2 other partners appointed other firm as tax auditor, and there was a big conflict and chaos. So by just orally somebody says that you do the audit, there's no documentation. Sometimes, bad part of our profession is that even fees are also not predetermined. So they say fees ka baad mein dekhenge. Now this is very dangerous. Baad mein you raise the fees and the client disputes those fees. So it is in your own interest that the appointment letter should be there. It's an essential part of working papers. And whenever the matter goes to the disciplinary committee, they insist on production of working appointment letter, because otherwise the client says that I don't recognize this. I have never appointed him as auditor. To that extent also people have gone. So it is in your own interest that you should obtain the appointment letter, ideally stating the fees also. And even for advisory service also, ideally you should take it. Because otherwise what happens is later on clients refuse to pay your fees also. Here, if you permit me, I will share with you a very interesting, very, very interesting case.
Please, sir. Please.
Mr. Agarwal, shall I tell?
Yes, sir.
It's very
Please,
interesting.
Yes, sir, please.
There was a company, there was a large addition in the income tax assessment. They appointed a very senior firm of chartered accountants. The chartered accountant quoted a fee, and we listened to the facts carefully, very interesting. They quoted a fee that they will charge some percentage of the total addition made. Now, what would be the normal reaction of all of us? What is the reaction, whether it is proper or improper? He quoted a fee, which is a percentage of the total addition made by the assessing officer. The normal reaction is that this is a misconduct, because this is not permitted. What happened was, when it sent the bill, because ultimately appeal was there, appeal was partly allowed. When he sent the bill, the company refused to pay the bill, saying that he had committed a misconduct because he has charged as a percentage. But it was very brilliantly argued by that counsel of that firm, and it was, High Court also upheld it. And very interestingly, they said that what is barred, what is prevented is percentage of the result of your work. What he has done is percentage of total addition. So imagine that suppose there was an addition of 10 crore rupees and there were 5 or 6 items of addition. Now, as a consultant or as an appeal advisor, you have to work on each and every item of addition. Under each one, you may get a partial relief. But ultimately, your efforts are with reference to the entire addition. I hope you are appreciating this point. And therefore, what he has charged is based on the work input or the content of the work. He has never said that I will charge on the basis of the results. So, he was not held guilty, because that is our misconduct item says that if you charge on the basis of the result of your work, he said, I am not charging on the result of my work, I am charging on the entire work content. So this is a very interesting case that I wanted to share.
Very beautifully argued, sir.
Very nicely argued, and you must appreciate that, yes, these are the niceties of our misconduct or the disciplinary mechanism.
Manu, there's some question in the chat box.
Yeah, there is one question from Mr. Vaze. Can a CA in practice be a Karta in HUF and make investments from the HUF file?
See, usually it is not permitted. If it is business, it is not permitted. If his investment is going up the HUF, then that is not a business per se. But if it is a business, then you have to obtain permission.
Okay.
Otherwise, you have
And
to show that, you see, what is the logic? What is the logic behind this about not permitting? Is that there are twofold objectives. One is that your attention is divided. That, see, ultimately our profession is very demanding. You have to constantly remain updated, upgraded with, and so much of regulation and knowledge sharing is there. Now, if you are engrossed in something else, probably your attention and your service level or service quality may deteriorate. That is the institute's perception. Secondly, if you incur any financial liabilities in that, then it is likely that you may compromise on the quality of your work. That is the reason. So what is required is you have to obtain a permission. But if it is in the nature of business only, then the permission is required. But if you are simply investing the HUF funds, then no permission is required. So also if you are simply doing as a trustee, honorary trustee of charitable institutions, that is also permitted, because you should not draw remuneration. But if it is a business, then you have to obtain permission.
There's one more question.
one more last question, I guess, from Mr. Gopal. Can I refuse to audit for subsequent financial year when my previous audit fees is unpaid?
Yes. Now, in fact, now they say it is the other way around. If the 2 previous audit fees are unpaid, then you have to report it to the institute, because now there's new thinking coming in the independent standard. It's a very good question that you ask. That if 2 years, more than 2 years fees pending, it is likely that to obtain the old fees, you are likely to compromise in the quality of the 3rd year. There, and it may be treated as if your financial stakes are involved. That is why there is a threat to the family. I can say that self-interest threat, because otherwise I will lose my old fees. Therefore, now you have to report to the institute, because it will make it treated as a loan to that particular organization. But there are riders to this, there are exceptions, that if it is not material in the context of your entire fees. Suppose my total collection is 2 crore rupees. One client has not paid me fees of 25,000 rupees or 50,000 rupees audit for 2 years or 3 years, for example. Now that fee is not that material that because of which I will compromise on audit. But if it is material, suppose it is 20 lakhs fees from a client and 40 lakhs rupees are now stuck up, then I am likely to, that is the institute's feeling, and it is true also, that I am likely to do some compromises in the 3rd year's audit. So your question actually is very relevant, and you are supposed to inform it to the institute if it is material.
Thank you, sir. I guess there are no more questions.
Thank you very much.
So,
once
I
again.
request Shyam to offer a formal vote of thanks to our learned speaker, Vaje sir.
Thank you so much, Mahendra Bhaiya. I would formally like to thank Vaze sir for taking out time from his busy schedule and addressing our audience. With his practical experience and the knowledge studies that he has given, I'm sure all of us have learned something or the other and will try to implement in our practice in future. And if we will have any questions, we'll definitely disturb Vaje sir again in future.
We
So,
have
thank
Nilima
you.
madam and Daya Shankar sir, please conclude the video and send to say that.
Thank
I'll
you so much.
request Nilima ji to
Nilima ji,
say and 2 things which 2 or 3 things I will say as a takeaway. You don't do anything on faith or trust. If you have faith, you must verify it. And the documentation part, he said, so we have to put great stress on working papers management, training very important, and we have to develop the habit of asking. It's very important, and it's very important also that avoid urgent works, and we must learn to say no to our clients. These are very important takeaways for me. And as a new resolution, you rightly said, we'll try to implement it, sir. Thank you very much.
Thank you.
Means,
Thank you.
sir, no means no. You're there, sir. No means no.
Yeah, Nilmaji, please share something as a concluding remark.
No, I always am very happy to hear him because the examples he gives are really eye openers. So basically, when you are doing audit, there is no friend, there is no relative. You just have to go and do audit, whether it is your own family or your best of friends. But when it comes to audit, be very careful. Keep your eyes, ears, everything open and do your work. And now with these,
True.
all these standards and this new code of conduct, I think we have to be doubly careful in whatever we are doing. And I mean, so many times there may be very small things which just slip while you're doing audit. So it is a continuous this thing that you must read the code of conduct, just like you're reading all the other religious books or something also every day. This could be one part of it, that at least keep on checking and ensuring that nothing goes wrong. And the people who are auditing in your office have to be always kept and have to be updated also to see that things are done in the proper way. Thank you so much, Vaje sir.
Thank you.
Such a wonderful disposition as usual.
Thank you, sir.
My
Thank you.
pleasure. My pleasure. Thank you.
sir.
All
Thank
the
you very
best.
much, sir.
All the best.
Thank you, everyone.
Yes.
Thank you, everyone.